€10 billion a month to support business. And Biden's early warning, the president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. Good morning then, everybody. Just 15 seconds or so to go until the start of the European equity trading session. European futures have been deteriorating a little as we've built our way up to the start of the European trading session. A lot of that reflects what we're seeing in the US. US futures looking a little more negative than they did. NASDAQ futures now down by 0.2%. So look for that to weigh perhaps on some of these markets. We've seen some real outperformance from the Spanish market on days when we've been getting into risk assets over the last couple of days. So we'll see whether that continues to be the case. And in fact, the IBEX opening to the upside, up by 0.4% or so. The FTSE 100 fairly flat this morning, so we're looking for the CAC and the DAX to open and give us a sense of where we are. We saw a continuation in yesterday's session of that strong performance around the Spanish banking sector and other value plays. That was a bigger global story, of course, but in Spain it seems to be picking up some significant momentum. We see the CAC opening now in Paris, up by 0.3%. So we're making modest gains, actually, at the start of the European trading session. We'll keep an eye on those fluctuating US futures. So European equity markets opening slightly higher, but this in conjunction with a technology sell-off that's really incredible to witness, really, in China as Beijing cracks down on the internet industry. Let's speak now to Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. Thushka, really good to speak to you. So let me ask you broadly about what we've seen this week and your stance on it. I mean, we've seen a big sell-off in tech stocks, a sell-off in growth names, and a move into value. Some say it's here to stay. Others say, hang on, don't make that call just yet. So what is your assessment of what we've seen this week?
Thank you and good morning to everyone. Yes, I think it is very important to be watching this rotation. We've been talking about it for a while, and while we can see an early cycle phase of the economy supporting a rotation, we also see the secular story in technology still being very much intact. So, we've just come out of our long-term capital market assumptions, which look ahead for the next 10 to 15 years. And in that, the secular story for technology remains very much in place. But as you say, on a cyclical basis, there is an argument to support value and especially cyclical markets. We don't think about it as tech versus other parts of the sectoral composition. We actually think about complements, and so yes, we do like cyclical markets, but we're not necessarily expecting tech to be a loser in this scenario. I think it's market recalibrating given the news flow we've had, but there's still a secular story in technology.
Yes, if it is recalibration, Thushka, and you talk about in cyclicals and cyclicals picking up, how extensive then should we look for that pickup to be, that recalibration?
Yeah, so that's exactly the exercise we're going through at the moment. We've had some positive news flow on the vaccine front, but there's still a lot of open questions, and so we're not expecting market volatility to dissipate on a linear basis. We still have concerns on the virus, especially going in the winter months here in the Northern Hemisphere. So that recalibration will take time. and we don't think it will be a one-way process, especially given the uncertainty on the virus. What I would say that has surprised us on the positive front is the private market access to technology and logistics, for example, and green technology. That has surprised us in its resilience coming out of the COVID crisis back in March. And, that's an area where we expect where we are still expecting positive performance alongside cyclical markets. Within our multi-asset portfolios, I should end by saying that we do have cyclical exposure to Europe and to markets like Japan, which are geared to the good cycle of the economy and a rebound there, and that remains a positive view that we have today.
Okay, that's interesting then to keep an eye on that in terms of those cyclicals. You've mentioned tech, and you say that the secular trend to tech is still very much intact. We've seen some heavy selling in Chinese technology stocks overnight, and this has to do with a clampdown by regulators in China. That's very specific to China. They're trying to address tech businesses that have become incredibly large and are trying to spread into financial services, and there are some real China specifics there, I suppose. But in terms of tech regulation, is regulatory threat a big issue, especially, and also in the US, given who is going to be president next year? Is tech regulation going to be a big theme for you?
It has been, especially running up into the election. I'd say tech regulation is an important factor to bear in mind given valuations. But I'd say the earnings cycle we've had in technology has surprised us positively. Yes, we have some headwinds in the short term for technology coming from potential regulation. There's still uncertainty on that regulation, but yeah, that secular theme, especially in emerging markets and especially in green technology, that secular theme of distinguishing green technology still remains a very strong feature in our thinking. When you talked about the election impact on regulation, I think there are still open questions on how that will be implemented, or even possibly if it will be. Tech stocks are they've rallied pretty strongly given the stay-at-home and the work-from-home environment. So we are seeing recalibration, but essentially, when we think about the long-term drivers for the sector, we're still expecting strong performance. But I'd say crucially, it's how you actually access that strong performance. We are looking more closely at real assets that are levered to the logistics components of technology, that are levered to green technology and environmental technology, and they've actually been very resilient and held up pretty well despite these headwinds from regulation.
Thushka, thanks so much. Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. She stays with us. We'll get further thoughts from her shortly. Just want to bring you up to date with what's happening in gilt markets. The UK 30-year gilt yield rises above 1% for the first time since March. So that's a pickup in gilt yields. Of course, we've seen a pickup in global yields in the wake of the vaccine announcement that we got from Pfizer and BioNTech. Also in the wake of the election, to some extent at least, and certainly running into the election with the fiscal stimulus expectations in the US. So global reflation, part of that story. And then you add on to that the UK specifics, of course. You can see that gentle move upwards we've seen in the 30-year yields in recent months. Coming up, planning for the future, we will discuss JP Morgan's long-term capital market assumption report. Thushka mentioned it a couple of times, but we'll get into some of the details. When they look ahead 10 to 15 years, what do they see? This is Bloomberg. Welcome back to the European Market Open. 10 minutes into a trading session that looks slightly positive for European equity markets, up by 0.5% on Euro Stoxx 600. Technology stocks under pressure once again, and that ties nicely in with a slightly unconvincing futures picture on the Nasdaq. It's been fluctuating quite a lot, I should say, but now entirely flat. We've talked a lot about technology with Thushka Maharaj from JP Morgan, so let's get into a broader conversation about the years ahead. JP Morgan long-term capital market assumptions report is in its 25th year. The research project takes a 10 to 15-year view on more than 200 major asset and strategy classes. So let's get back to Thushka Maharaj, JP Morgan Asset Management's global multi-asset strategist. Thushka, so when you look at things with that long-term lens, what does the global growth story look like, firstly? I mean, how do we recover from the pandemic? What kind of assumptions do you make?
Yeah, as you said, it's our 25th year, and I'm very excited today to talk about it. It is a cross-platform across the whole of JP Morgan Asset Management, and you know we've learned a great deal over the last 3 cycles in terms of how to build our long-term growth assumptions. And the way the LTCMAs work is that we use supply-side factors to build up long-term trend growth, so labor growth, productivity, and capital investment. These are the long-term drivers for us. And this year we went through quite a long stress testing exercise, as you correctly highlight. Coming out of this the recession that we experienced, this very sharp recession, we are in unusual times. And I'd say our growth forecasts are largely unchanged, but that masks a lot of stress testing that went on under the surface. Basically, it's too early for us to make any definitive conclusions on the long-term implications of the COVID recession we've been through. One area where we are seeing a modest change is on the inflation front. So our growth forecasts remain largely unchanged. We're expecting US growth about 1.8% in a trend basis. So that's largely unchanged. It's got a modest cyclical bonus. But the place where there is debate and the place where we are watching for changes is on the inflation front. So we are now moving to a more coordinated world in terms of fiscal and monetary policy. And for us, that increases the risk premium we should be attaching to higher inflation outcomes. We didn't change the base case picture for inflation, but it's more the distribution of risks around that. And I know this is quite an important topic for clients, and it's very important for the cyclical or value rotation we were talking about earlier. To see a sustained move towards value, you need to see inflation expectations moving up and realize the inflation also moving higher.
And what do you assess then is the impact of what you call the fiscal decade? I mean, firstly, do you really have conviction that we will end up in that place? Because delivering that kind of fiscal impulse in democratic environments has proved difficult in the past. Do you really think that we are going to see that fiscal decade? How substantial will it be?
Yeah, so as you rightly point out, the politics matter in terms of fiscal spending. But what I would say is that the last 10 years, we saw monetary policy being the main anchor, the main support mechanism for economies. Looking over the next 10 to 15 years, we expect more coordination across fiscal and monetary policy. How likely is that? We think it's actually in train already in Europe. With the European Recovery Fund and the cohesion that we're having on a pan-European basis for fiscal spending, and essentially the appetite to enact austerity is so much lower now than it was 10 years ago. The US is slightly different in the sense that we need to watch what happens post this US election. But I'd say the thesis that we are likely to live with higher indebtedness over the next 10 to 15 years, whether that's on the public side or the private side, it is a theme that runs across the LTCMAs. We're expecting higher indebtedness and higher fiscal spending. What this means for markets, as you say,
We'll have to leave it there for today, but thank you so much for bringing us the report, and congratulations on 25 years of it. Thank you very much for bringing us your thoughts today on the broader markets as well. Thushka Maharaj, JP Morgan Asset Management Global Multi-Asset Strategist. I'll actually get another opportunity to speak to Thushka in my conversation with her on Bloomberg Radio at 9 a.m. UK time. Now, I should tell you that Credit Suisse's CEO, Thomas Gottstein, is speaking to Bloomberg's Francine Lacroix as part of our Bloomberg event, The Future of Finance. We've already heard a few lines from him saying that banks have dealt well with the crisis. Let's listen in for a moment.
I'm sure there will be similar statistics in European EU countries, and that's why it is a pressure for the industry. Obviously, as Credit Suisse, we have a more balanced business model. We have private banking, we have recurring revenues, we have transactional revenues. We are less dependent on net interest, but it's still very important for us, and therefore the whole industry has this challenge. And that's one of the reasons, besides the fact that many countries in Europe are overbanked. That's why I think the consolidation will continue.
Significant consolidation? What part do you want Credit Suisse to play in that? And you mentioned overbanking in Europe. If we speak to each other in 10 years, and I hope we'll do many interviews before then, but how many banks will be left in Europe?
Well, that's a bit tough one. But if you look at Switzerland, we went from 2000 to 2020. In 20 years, we went, I think, from 360 to 250 banks. So 110 banks have disappeared. And so that's, about 6 banks per year or so. I think it will probably rather accelerate across Europe and also in Switzerland. There will be continued consolidation, and it's more domestic. I think cross-border consolidation is more difficult to actually execute, but there will also be cross-border consolidation, I'm sure. So I cannot give you an exact number, but what I'm convinced is that consolidation is needed and will happen.
So is everything you do in actually managing the bank?
We'll leave that there. Francine Lacroix, the Future of Finance conversation with the CEO of Credit Suisse. Interesting conversation to keep an eye on. And of course, we'll bring you headlines from it. Coming up on this program, the Green Debate. We discuss climate action and the transatlantic relationship under a Biden presidency. That is next. This is Bloomberg.
climate change is happening. It needs to be repeated over and over.
126 governments have now committed to net zero, including 3 global giants, China, Japan, and South Korea.
We also must harness the firepower of the financial sector.
The financial community has a critical role to play in driving this transition. And that includes asset managers like BlackRock. The investment industry now has the opportunity to further accelerate this phenomenon and demonstrate that we can be a catalyst for change.
We're going to lay out for our stakeholders how we intend to align with the Paris Accord.
The economic challenges of the climate transition are phenomenal. And then I ask myself, how much does it cost? A lot. But nothing that we cannot afford, because the cause is our survival.
ECB President Christine Lagarde ending that selection there of comments from policymakers, politicians and executives gathered virtually for the Green Horizons Summit in London to discuss climate change. Across the Atlantic, climate change is firmly back on the agenda. President-elect Joe Biden has pledged to spend trillions of dollars to fast-track the transition from fossil fuels, slash emissions and curb climate change. For more on what a Biden presidency means for climate change and relationships on that front with Europe, let's get to our next guest. Joining us now is Cem Özdemir, Bundestag Green Party member, former chair of the German Green Party and founder member of the European Council on Foreign Relations. Cem, very good to speak to you. How high are your expectations of the Biden presidency when it comes to climate?
Well, we lost 4 years in the U.S. under the Trump administration. The U.S. was practically absent from the fight against climate change. Before that, let's have in mind 8 years of the George W. Bush era, where the U.S. as well was more or less absent in the fight against climate change. So we have to hurry up. There is high pressure, high expectations. It's clear Europe has taken the lead in between, but we also know we're not strong enough to do that alone.
What are the specific areas of cooperation that you would like to see the US administration join with Europe in efforting? I know that they've said, I know that President-elect Biden has said he'll go back into the Paris Accord, for example, but what else do you want to see?
Well, that's the most important step, to go back to the Paris Accords, and then the next step would be that we have joint goals. If the U.S. is taking the lead again on renewables, on decarbonization of transport, and Europe is joining that together, we already started that, we can make a difference. Imagine that the U.S. together with Europe goes to China and says, we might disagree on so many issues like human rights, like Hong Kong and other issues, but on the fight against climate change, we want you to join that fight. We want you together, that we create a force on this planet of those nations who believe there is climate change and we have to do something because we owe this to our children.
We've seen tension, of course, across the Atlantic on a number of fronts over the past 4 years, Chairman. One of those has been around Nord Stream 2. You've criticised Nord Stream 2. President-elect Biden criticised it, years ago. What policy stance would you expect him to take on this particular part of the European energy mix?
Well, the standpoint of my party, of the Green Party, is we want to be energy independent. That includes countries like Russia that are, to us, not reliable partners. Russia has clear intentions to destabilize the European Union, to make us dependent from him. We don't want that. And by the way, this is not a renewable energy source. So therefore, it's clear we would love to stop Nord Stream 2. Together with the US, we completely agree there. The question is whether it's too late when we enter power, hopefully next year.
Right, and what about the sanctions that the US currently has in place in relation to Nord Stream 2? Would you like to see movement there?
Well, let's face it, we were not in one house or even a family with the Trump administration. When Biden-Harris is the next US administration, we're friends, we're family again. family of those nations that believe in liberal democracies, the rule of law and everything. So therefore, sanctions should not be on the forefront. We should sit together, settle our problems, and then agree together joint. Because let's not forget, you know, there are not that many partners in the world who believe in rule of law and democracy and everything. So therefore, we should target others who think that climate change is not existing or that they should not do anything. We should target those who believe that liberal democracy is something to attack. So the enemy is neither in the US nor it is in Europe. The enemy, if we might use that word, is elsewhere.
Cem, just briefly, do you see opportunity for European business now, given the pivot in policy in the US?
Well, I mean, not all companies obviously are in favor of Nord Stream 2, only those who are directly involved and have a lot of money to earn. So therefore, it's clear this is not about European economy. This is about Mr. Putin, his aspirations. We have good reasons why we're still against that project. But let me remind you again, there is a decision taken by a legal parliament. The process is ongoing. We're in opposition. Okay. We're currently not in the national government. So it's a process of democracy.
Cem, thanks so much for your time. Cem Ozdemir, Bundestag Green Party member. Up next, we'll speak to Continental's CFO, Wolfgang Schäfer, about the company's results and outlook. This is Bloomberg. Welcome back to the European Market Open. 30 minutes then into your trading session here in Europe this Wednesday. Let's look at where we are on the European equity picture, but also in some key sectors we've been tracking this week. Looks like a little bit of a reversal of the last couple of days. Yes, the European equity market is moving to the upside, but one of the key features of the value trade, of course, is the banking sector, and banks actually moving down today. We've had some earnings out of the banking sector, and perhaps that is weighing a little bit. Technology stocks move to the upside, up by 0.2%, though, so not by a great deal. We don't have a great deal of weighting towards technology here in Europe, so that doesn't always set the pace. Nasdaq futures, incidentally, back to positive, up by around 0.3%. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. Joe Biden uses his first news conference as president-elect to criticize Donald Trump's refusal to concede the election. Biden says he's moving forward, regardless of legal challenges from the Republicans and the lack of cooperation from the White House.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Italy may need to spend as much as 10 billion euros a month in virus aid. Sources tell Bloomberg the lockdown measures are estimated to cost the government about 3% of Italy's GDP if they last until March. Under softer rules, the aid bill would still be at least 6 billion euros a month. Hong Kong has removed 4 opposition lawmakers due to new rules from Beijing. China has passed a measure requiring politicians in the city to be patriots and not support independence. The remaining opposition members of the Legislative Council earlier pledged to resign en masse if any were disqualified. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura Wright, with your business flash. Up next, a tech sell-off in China. We'll look at Beijing's antitrust regulations and their impact on the internet industry. This is Bloomberg. Welcome back to the European Market Open. 35 minutes then into Wednesday's session. European equity markets make modest gains. Banks retreat. Technology making modest gains this morning. Now, technology very much at the heart of things. And what's happening in China in session overnight. Alibaba is leading a sell-off in Chinese tech giants after Beijing's broadest attempt to rein in its most powerful private sector firms. That comes as the company holds its annual Singles Day sales event. Bloomberg's Tom McKenzie spoke exclusively to Alibaba VP Liu Bo.
I think the sale performance is within our estimate, with very decent overall growth, which closely links to consumers' enthusiasm. The growth number comes from the huge enthusiasm of consumers. So the overall growth is within our estimate. I hope at the end of today, we will see a good sales number when we recap and share it with you.
How much engagement are we seeing this year with foreign brands? I know you've added something like 2,600 new foreign brands to your categories. How much demand is there?
Chinese consumers are fond of foreign brands. Those from the middle class or people with strong purchasing power from Tier 1 or Tier 2 cities, they already have a big appetite for shopping. In light of the overseas travel restrictions imposed by the pandemic, I think we can see higher enthusiasm for online consumption during this shopping festival.
When do you think we get back to pre-pandemic levels of retail sales in China?
From Alibaba's perspective, we are not only looking at online sales, but paying a lot of attention to offline sales too. The recovery in offline sales has been very good and has exceeded many people's expectations. Offline has not reached pre-pandemic levels, but it has recovered very well. For online sales, we've seen stronger growth this time around in both customer behavior and brand participation. I think putting everything together, offline sales will recover to a better level in 1 or 2 quarters. But if we only look at online sales, I believe it's already returned to normal.
China has unveiled new anti-monopolistic regulations. Many see this as a key change in the way that the government approaches technology companies, an attempt to rein in the power of companies like Alibaba. What do you think the impact of these new rules will be?
We've just noted this new regulation over the past couple of days. I think we will need to further study the draft. We will see later how we should accommodate this new regulation imposed by the government. I don't think this is a surprise. As you know, the Chinese market is in the process of constantly regulating. China's government would like to regulate markets and engage in more market research in all sectors. Over recent decades, the Chinese government has kept improving its law and regulation. We've been growing during this process.
We've also seen changes in regulations around internet finance, online finance, which of course impacted Ant Group, and the IPO of course was cancelled. There's concerns that it may restrict the ability to offer credit by Ant Group to some of your consumers, and also financial transactions will be seen and have more oversight. What do you think the impact potentially of that is on your business in the e-commerce space?
On the Taobao platform, we've been encouraging our consumers to be rational with their purchases on the basis of meeting their needs.
That was Alibaba VP Liu Bo speaking exclusively to Bloomberg's Tom McKenzie. For more on the tech sector right now, Alex Webb, our Bloomberg Opinion tech columnist, joins us now. Alex, great to speak to you. So we're seeing heavy selling of big tech names over in China in this overnight session. Why are Alibaba and its tech peers a target then of Beijing's tech crackdown? We were hearing earlier on that this had something to do with their attempted move into financial services.
Well, there have been a number of things over the past few years, but we've simply seen the scale of these companies, much as they have in Europe and the US, just grow at an almost untrammeled pace. And there have been whispers out of China that there's some concern about the sort of power that is agglomerating around the individuals who lead them. That people like Jack Ma are becoming celebrities in their own right as businessmen, and that's something that sort of sits a little bit uneasily with the leadership in China. Now, perhaps if you look towards what's happened in this part of the world, where it's increasingly, once companies are of a certain scale, it's very hard to regulate them, and they become as powerful in some instances as the regulators themselves, or at least they have, huge ability to push back against regulations. So one wonders whether it's an effort to preempt some of that. They are huge companies already, but not in terms of revenue as sizable as the likes of Google, Facebook, Apple, or Amazon.
Yeah, and talking of Amazon, turning to Europe, Alex, around this time yesterday, we got news of the latest latest legal activity against big tech coming through from Europe. What is the latest on that particular story?
So we knew that the European Commission was investigating the way that Amazon uses data in its marketplace. So if you're a third-party seller, as you call them, selling your product on Amazon Marketplace, Amazon has the ability, at least, to look at that data and see what is doing well, and then potentially think about introducing its own competing products. Now, that investigation advanced, and the Commission unveiled its statement of objections, which brings it one step closer to possibly imposing a fine or behavioral remedies. But to add insult to injury, the Margrethe Vestager, the commissioner in charge of this, extended the probe, added a new probe into whether Amazon, in fact, favors its own products and gives them greater prominence, and therefore it makes it more likely that consumers will buy Amazon-owned brand products than ones provided by third-party sellers.
Thanks very much, Alex. Alex Webb, our Bloomberg Opinion Tech columnist. Thank you very much to Alex for joining us. When we return, we'll talk more about what's going on in the car sector. How much visibility do we have around the pandemic through the winter, even ahead of a vaccine? We'll get into that conversation next. This is Bloomberg. Welcome back to the European Market Open. We're 45 minutes into a trading session that looks kind of mixed, but in all, we move to the upside. So Europe Stoxx 600 up 0.5%, banks retreat, tech makes gains, so a little bit of a break from the last couple of days. Let's talk about the earnings story. Continental expects a profit margin of only about 3% this year. This may be a reflection of how much pressure earnings are under at the auto parts supplier as it searches also for a new CEO. Joining us now is Wolfgang Schäfer, the CFO of Continental. Very good to speak to you, Wolfgang. What kind of visibility do you have then for the winter months, given the uptick once again in the pandemic?
Well, you know, we were encouraged now enough to give a guidance for 2020, so at least we see some more visibility to be in a position to talk about what we expect for the rest of the year. It is less volatile than we have seen it in the second quarter and obviously in the first quarter. Still, there is volatility in our markets. And our guidance, which we were giving now for the fourth quarter, by the way, 4 to 6% in the world car production below prior year, so still a weaker quarter. But we think pandemic effects on these numbers should not be too big. But again, volatility is there and predictions are still more difficult than they have been a year ago.
What will you wait for before taking a more optimistic stance, Wolfgang? I mean, we've had news this week about a vaccine, for example. What would you need to see to enable you to make more positive estimates for 2021?
Well, obviously, we see consumer demand really kicking in and the demand for cars really kicking in. And this is what at the moment we don't see. And I think all this information about a vaccine coming next year is quite early at the moment to expect effect already on what we can see in the call-offs from our customers for cars and the cars sold. Don't forget, in addition, that we are in a technological transformation area for the car industry, moving from combustion more to electrification, moving towards more autonomously driving cars. We have technology for that, but all this has as well an effect on consumer buying behavior. And these two trends, on the one hand side, the pandemic, on the other hand side, these trends in the automotive industry are there together. It is still true that we don't expect for the next years to come back to the highest level which the automotive industry has seen in 2017. We think this will still take a while, some years, before we finally reach that point again.
You've scheduled an investor day for next month. What are the key topics that you're going to try and address during that investor day? It must be a bit difficult without a new CEO as well.
While the topics which we will address are the topics mainly on the technology change in automotive, in the automotive industry, and our contribution to that, to show how well we are prepared to deliver high-performance computers in the car, what our role can be in operating systems, what our contribution and our system deliveries can be in autonomous driving. This will be the focus, and out of this, including the rubber group, building the whole group strategy for the years to come. After we did not have an investor day for some years now in this changed environment, it is something which the market rightly expects from us, and this is what we will discuss in this investor day, including our midterm targets.
And in terms of strategy, Wolfgang, we've been reporting here at Bloomberg that you're looking to sell part of your business, the turbocharger business. What is the status of those discussions, and are you looking to sell other units?
You know that we have this Transformation C program running, which is the adaptation of Continental's structure to the future of our business. And we have always said, when we started to announce this Transformation C program, that this will include as well portfolio adjustments where they are necessary to make sure that we are moving in that direction where we want to concentrate us. Example, in powertrain Vitesco, we want to concentrate on electrification. Yes, and this includes then that the one or other unit might not be in the long run right at Continental. Continental might not be the right owner for that, and their disinvestitures might be coming. I don't want to comment on specific areas, but yes, you can expect some things over the next 12 months to happen.
Wolfgang, are you contingency planning around Brexit? Are you buying warehouse space and adding to stockpiles, for example?
Yeah, we had sufficient time now to prepare for that. I think we are not so much affected, but yes, we deliver tires. We are delivering tires, and we are in the UK market for tires. They are imported. We are provisioning for that. We do as well deliver parts to the car production in the UK. We are partly producing even in the UK. And yes, we are preparing for all these scenarios which might happen at the end of this year.
Do you think you're going to have to produce more in the UK if there is a no deal to enable to supply those UK producers, Wolfgang?
Well, that is obviously a decision which has to be made very much focused on the specific product you are talking about. For some products, even if there would be less favorable trade agreements as we have them now in place, it might still not make sense to do a small unit of a product which has economies of scale to produce this in the UK, still might have to be imported. I think this will be true for most of the products which we are selling in the UK. For the one or other part, it might make sense to move production into the UK. I don't see much of that, though.
What kind of impact do you expect this Brexit process to have on just-in-time manufacture? If we assume there's no deal, where does that leave the just-in-time manufacturing process, of which you are a part, of course, because you, as you say, you supply some of those parts to UK manufacturing?
Well, where it is a real tough just-in-time and just-in-sequence process, we are already having the production in the UK to deliver to the car maker just in time, just in sequence, so basically on an hourly basis. Everything else, we believe, can as well be managed as it is today, partly with supply chains which are not having the latest production point in the US, but have that outside, and then we deliver from there with some buffer in between, obviously, in the UK.
Wolfgang, thanks so much for your time. Good to speak to you. Wolfgang Schäfer, the Continental CFO. Let's get a Bloomberg Business Flash. Here's Laura.
Thank you, Anna. Italian payments company Nexi is nearing a deal to buy rival Nets. Sources tell Bloomberg the companies have agreed on most details of the all-stock transaction. It would value Nets at about 7.8 billion euros. It may be Nexi's second major purchase in around 1 month after buying another competitor, Sia. In the gaming space, Epic has won the dismissal of 2 of Apple's claims in its ongoing dispute over access to Fortnite on the App Store. The dispute began where Epic circumvented Apple's payment system. Apple then stooped new users downloading Fortnite and countersued, alleging theft. That's been thrown out, but the main fight goes on. ABN AMRO is bouncing back from a difficult first half of the year. It's posting stronger than expected profit and setting aside less money to cover bad loans. The Dutch bank is on track to meet its overall cost-cutting targets, but it will miss goals for its cost-to-income ratio as well as for return on equity. That's your Bloomberg Business Flash. Anna.
Thanks very much, Laura Wright here in London. Let's get to the markets now. Joining us now is Heather Berg from our Bloomberg Markets Live team. Heather, interesting to see where banks are going today, where technology is going today. It does seem as if we've got a bit of a reversal of some of the trends over the last couple of days. I see the IBEX underperforms. Maybe that's partly the banking story, as it had been such an outperformer in recent sessions.
Yes, good morning. We're definitely seeing some of an internal rotation in European stocks in the past half hour or so. You've had healthcare very defensive, being one of the biggest performers, best performers, and you've seen tech lagging, and also banks and Spanish stocks. So basically, a lot of the more value players that we've seen really outperforming the past few days on vaccine news, investors seem to be kind of pausing for breath, maybe doing some profit taking and looking at some more defensive sectors.
Yeah, and looking at what's happening to tech stocks today and the break with the last couple of days, I guess, and banks, I suppose it has people asking, you know, whether it really was a rotation into value that we were experiencing earlier on this week. What are you hearing?
Value stocks have been on a long underperformance versus growth. This week has, been a boost, investors looking for bargains for battered sectors, but sectors such as banks really face a lot of headwinds going forward. Credit loss provisions and the economic slowdown from the pandemic. So investors, again, might be taking pause this morning and seeing, okay, have some of the rotation that we've seen gotten a bit overheated.
And what about sectors that have maybe been going their own way a little bit this week? I mean, Heather, everything seems to have been correlated at one level, and we did see oil prices get a boost from risk appetite earlier on this week, and that seems to be continuing, even as some of the moves earlier on this week are a little unwound. We see a continuation of moves higher in oil prices. 44.52 is where we trade on Brent, but we're not at all back to March highs, are we? Should we expect to get back there? What are you hearing on the Markets Live blog?
The biggest thing, I mean, oil definitely has been a beneficiary this week. The biggest sort of headwind that it needs to look at is pandemic demand. Is the economic slowdown that we've seen as a result of the pandemic, how much is that going to weigh on oil prices going forward? That is the biggest thing that might weigh on them going back to the March prices.
Thanks very much. Thanks, Heather. Heather Burke from our Bloomberg Markets Live team. Thank you very much to Heather for that. Ending that conversation, talking there about oil prices and where we might see oil prices settle. As I say, 44.58, up by just over 2% in today's session for the Brent price. That is it for the European market open. Staying with Bloomberg Television. Surveillance is up next. Surveillance will continue to take you through what we're seeing in these markets this morning. The Stock 600 up by 0.5% or so. FTSE 100 up 0.3%. The CAC and the DAX also modestly in positive territory. Interesting to see the IBEX underperform after such outperformance in recent sessions. The banking sector under pressure today. ABN AMRO down by just over 5%. Nordea down by just under 5%. That is certainly where some of the negativity in today's session is coming from. This is Bloomberg.
Joe Biden says Trump's refusal to concede is an embarrassment as the White House stalls the transition, while Secretary of State Pompeo even talks of a second Trump administration. Biden's Brexit warning. The president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. And risk-on rotation, a move out of tech, picks up steam, while a Chinese cracks down on tech wipes almost $260 billion in 2 days. Alibaba and Tencent sink. Well, good morning, everyone. Good afternoon if you're watching from, of course, Asia. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. So let's talk about the rotation. Let's talk about what exactly we've seen in the markets and what's to come as well. Now, if you look at some of the things that are closed today, we don't have cash U.S. Treasuries. This is because it's Veterans Day. Of course, in the UK, we call it Remembrance. If you look at stocks, they're advancing thanks to some of the cyclical industries at the expense of technology shares. Crude oil is rising. It's very clear that tech shares are underperforming, including the Dutch internet provider Prosus. The picture is a little bit brighter, actually, for U.S. shares, and we see some of the futures edging higher along with contracts from the S&P 500. So we'll have plenty more, of course, on the markets. Also coming up, we speak to the former UK Prime Minister, Tony Blair. We'll be talking about the future of the UK-US relations under Biden, the country's handling of the pandemic, and much more. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Good morning, Francine. Joe Biden is warning Prime Minister Boris Johnson not to put peace in Northern Ireland at risk in pursuit of Brexit. He used his first official call with the UK leader to reaffirm his support for the Good Friday Agreement. It's the latest sign that Biden won't be the unequivocal backer of Brexit that President Trump has been. The UK is planning sweeping new powers to intervene in foreign takeovers it deems a threat to national security. It includes retroactive action on deals that complete after the bill's publication. That's a controversial provision that critics warn may deter investors, but the UK says it is in line with similar rules seen in France, Italy and Germany. Hong Kong has removed 4 opposition lawmakers due to new rules from Beijing. China has passed a measure requiring politicians in the city to be patriots and not support independence. The remaining opposition members of the Legislative Council earlier pledged to resign en masse if any were disqualified. The hurdles to mass distribution of Pfizer and BioNTech's vaccine are becoming clearer. Shots have to be stored in a deep freeze, transported in refrigerated vehicles, and once thawed, used within 5 days. Countries will need to build the production and transportation networks from scratch. That will require massive investment and coordination. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Now let's kick it off with the markets. European stocks continuing their November advance with gains fueled by the rotation into value stocks. Now, U.S. equity futures are edging higher. The dollar is trading relatively flat after recovering from its weakest levels on Monday when it sank to a 2-year low. Now, joining us now is Itai Tukman, global head of FX at Citigroup. Itai, first of all, how much of a rotation is this that will actually last? Is this just the markets being whipsawed and concerns on technology, or is this a move that can stay?
You know, we think this is a more fundamental and secular move. We continue to be quite dollar bearish. And we think that, the long-term trend around overweight dollar assets and low hedge ratios, coupled with a very vigorous 2021 global recovery, should put the dollar very much on the back foot in the months ahead.
What does it mean for some of the emerging markets that are, of course, tied to dollar?
Look, I think that EM has been a very unloved asset class for a number of years. And I keep saying, it's not one construct. So there are winners and losers in the emerging markets. But there's some high-quality EM countries and currencies that we quite like. Mexico is a very, very good example of one. We've seen a decent rally in Mex over the last few weeks, but we think that can continue. It's a weak level. There's quite a good real yield in Mexico. It's very well geared to a cyclical recovery, including the oil factors. So we like currencies like Mex.
So, Itai, what exactly is the market looking at for this rotation? Is it, the Biden administration? Are they overlooking some of the concerns that could actually hit us quite hard? Is there too much optimism about a smooth transition? And is there too much optimism that we'll get a vaccine pretty soon?
Look, I think the market's looking past some of these political issues now that we're post-election. And I think, the real question is what happens to the fiscal stimulus considering we didn't get a blue wave outcome. It looks unlikely that we get a blue wave outcome. And I think the market is simply implying that the Fed will carry more of the load if necessary. So if we do get pessimism, if we do get a sort of a weaker recovery, the virus situation gets worse, the market's simply perceiving that you'll get more monetary stimulus out of the Fed. And again, that puts the dollar on a weak foot.
Itay, what's the most strange pairing right now that you're looking at that you think is a good bet? Is there something significant out there that, that's being overplayed? And is there something less significant where you can actually make some money?
Sure. I mean, we like currencies like the Aussie dollar, where we think, again, you benefit from cyclical recovery, you benefit from Asia certainly having a much better prognosis, handling the virus situation much better, in Australia and New Zealand doing quite well. And then you have the sort of terminus of monetary easing that I think is now quite likely in both Australia and New Zealand. So Aussie dollar has a lot of these factors going for it. So we're quite bullish on Aussie. The other one that I think we talk about a lot is sterling. And again, there's this sort of binary deal, no deal question looming. But, if you're like me and you really believe that we will get a last minute deal, UK assets, very cheap on a global basis, a lot of investors waiting for certainty to buy into the UK. That could be a sleeper trade that could move quite a lot.
Itay, what do you do with Turkish lira? I need to ask you about it because, frankly, the last week was dominated by U.S. politics and what's going on with Erdogan and the central bank.
So, Turkey has been a very challenging situation, both for investors and domestically. And at the moment, we have a bit of a bright spot with a return to what I would call a more orthodox economic policy, and a new finance minister saying all the right things to the market. But again, the economic situation in Turkey still has, a lot of challenges ahead. So I'm not convinced that it's the moment to be, very long Turkish lira. I'd say on balance, I think the currency can continue to sort of depreciate. But, the near-term risks of some kind of much bigger crisis moment, a bit lower.
Thank you so much, Itay Tukman, there, Global Head of FX at Citigroup. Too short a time, Itay, so you'll have to come back to also talk about pound and euro. Coming up, we speak to the former UK Prime Minister, Tony Blair. We'll be talking about the future of the UK-US relations under Biden. We'll also talk about the country's handling of the pandemic and much more. Tony Blair coming up shortly. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Is the State Department currently preparing to engage with the Biden transition team? And if not, at what point does a delay hamper a smooth transition or pose a risk to national security?
There will be a smooth transition to a second Trump administration.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Well, that was the Secretary of State, Mike Pompeo, and President-elect Joe Biden speaking yesterday. Pompeo's remarks may have been in jest, but adds to Trump's unsubstantiated claims of voter fraud. Now, Donald Trump praised Pompeo's comments, but one Democratic lawmaker described them as shameful and dangerous. Joe Biden, in his first news conference as president-elect, said he was moving forward regardless. Well, joining us now is Tony Blair to talk about the transition, to talk about politics in the U.S. and elsewhere and multilateralism. He is, of course, a former UK Prime Minister, the founder and executive chairman of the Tony Blair Institute of Global Change. So thank you so much for joining us. Mr. Tony Blair, how should global leaders actually deal with this rather unusual transition period in the U.S.?
Well, what they'll do is they'll let the American system take its course, obviously, and they'll not want to interfere in that, but they're going to treat Joe Biden as essentially the next American president, which is why you found the leaders engaging, having telephone calls with them and so on. So they'll probably take the view this thing will sort itself out in the next few weeks, and they will act on the basis they're going to be dealing with the new administration. And what governments around the world, including our own here in the UK, will be doing is working out how they establish the right relationship, what are the issues they're going to cooperate on, and so on.
What does it mean for, does it actually change the standing of the U.S. in the eyes of other leaders going forward? Or is it an episode that will be, dealt with swiftly and then we can put behind us?
I think it's going to be the latter, honestly, because most people are dealing on the basis that, there will be President Biden, and that's the administration they're going to be looking at. So in all the conversations I'm having with different governments, we work with about 25 or 30 different governments around the world. They're just operating on the basis that at some point that will clear itself out of the American system, and they will get on with dealing with the new administration come the end of January.
What does Joe Biden administration actually mean for multilateralism?
I think what it will mean is that there will be a reigniting of multilateralism in a number of different ways. So I think you'll find the transatlantic alliance gets a boost and goes back on the table as a central factor for the US administration. I think you'll find there's a re-engagement around WHO. I think particularly on the climate change agenda, America obviously will be much more forward-leaning. So that's going to be a big change. And then, I think in general terms, there will be people will want to engage with the administration to try and work out, for example, what will their relationship with China be? How do people fit into that? So there'll be people will think there's going to be more stability and predictability. They will believe that there's going to be a renewing of traditional alliances. And then I think for the rest of it, frankly, people will engage and wait and see a bit.
Does it make a big difference, or should it make a big difference to the current Prime Minister of the UK? Is it going to be more difficult to have, to deal with Brexit and then have a quick deal, a commercial deal with the US?
I don't think so in the end, because even though obviously Donald Trump was very much in favor of Brexit and Boris Johnson became Prime Minister as a result of Brexit, on trade, I think a trade deal with the US is quite a long negotiation, frankly, whoever was in power in the US. The Northern Ireland situation, I think Joe Biden is very committed to that. I know he was always a huge supporter of the Good Friday Agreement that my government negotiated. So that will be a major factor. But then I think there's also the issue of climate change, where, frankly, Boris Johnson has a real opportunity to engage with the American administration, because the UK government, this is pretty much a consensual issue within UK politics, So, and Britain has got the leadership of the international negotiating forum for next December, not this December, the December afterwards. And therefore that's, I think, probably, despite all the past around Brexit, I think there will be a genuine, it's a deep relationship, the US-UK relationship. It's a deep systemic relationship in our military and intelligence, across the board on trade and business. And you have a very big issue, namely the climate agenda, in which this UK government and this new administration will be aligned. And I think the sensible thing for the UK government to do would be very much to focus on that initiative and get also, I think, an opportunity, because the US is the G7 at the moment. The UK takes it over for next year. That's also around issues to do with the global pandemic, for example. I think there's going to be a real opportunity there for the two governments to focus on what are the global things we should be doing in the future to make sure we're better prepared next time. So I think there's, despite what people will say, and despite obviously a certain history, and despite them being from different parts of the political spectrum, I think there's plenty for the UK and US governments to work on if they want to, and they will want to.
Tony Blair, I know your institute and yourself have done a lot of work on COVID-19, and you've just put out something called, light at the end of the tunnel. First of all, are we dealing with track and trace and lockdowns and COVID in the right way in the UK?
Well, look, I've had my criticisms of the government over lockdown and test and trace and indeed moving to mass testing, which I think is essential. But to be fair, I think the government is now on a path which should or probably, hopefully will combine the four key elements to getting us out of this in a sustainable way and getting back to something like normal. And that is vaccines, therapeutics, testing at mass, and data. And I think my paper's actually, my institute's publishing a paper, in fact, on vaccines today. If you look at vaccines from around the world now, we've got some very, very promising candidates. I think in the UK, we'll probably be using 5 or 6 different vaccines. You've got the Pfizer one the other day, AstraZeneca one's in a very strong position. So I think you'll have a strong capability on vaccines. On therapeutic drugs, it's more difficult because there's real issues around the manufacture of those, but you've got Regeneron, you've got the Eli Lilly one in the US, you've got an AstraZeneca one, there'll be more coming through. Those will reduce, particularly for early stage patients, the severity of the disease. That's important. You've got a lot of rapid tests that you can use for mass testing, much better sensitivity and specificity nowadays. And there will be the issue of data, which I think will be dramatically important. I still think we're falling down a bit on that. We need the best data systems we can possibly have to record all this information. But if we focus on those 4 things, by this time in the spring, I think we'll be in a much better situation.
Is there a danger that we're focusing too much on a vaccine too quickly, and that actually, our new ways of life will have to stay a little bit longer until we're 100% certain that this vaccine will work and that it will be distributable to enough people?
Right, so my view of this is there's 2 criteria, one's safety, the other's efficacy. If you pass the safety test, I mean, you've got to be 100% sure on that. You pass the safety test. On efficacy, don't make the best the enemy of the good. If it's going to reduce the disease by, say, 50%, and probably these vaccines will be significantly north of that, I mean, Pfizer are talking about 90%. But if you're even reducing it by 50%, even 40% actually, you're going to make a big difference to your ability to control the disease. So my view is that the vaccines, provided they pass the safety test, and remember, each of these vaccines has been tested now, the main ones coming through now have been tested on tens and tens of thousands of people. If you're clear on safety, get the vaccines out as soon as possible, because you're going to save lives and you also allow your economy to start moving again. But it's a big logistical exercise to work out exactly who gets the vaccines first and how you register each person and how you then log the data of that. And frankly, for the next year, both with vaccines and with therapeutic drugs, and indeed with tests, you've got to get really good data so that you're tracking what's happening to all of the people using these things over this next year, because your knowledge about this disease is still going to be increasing.
You mentioned the economy. What is the one thing you would change to make sure that the economy worldwide is on a better footing post-COVID?
Well, the thing that I would change is, apart from obviously trying to coordinate some of the economic stimulus measures, but the thing I'd change is get the vaccines and therapeutics out of the door as quickly as possible, subject to safety. But that's the only way you're going to deal with this is we're going to be living with COVID for several years. I mean, that I think is absolutely obvious. And I think part of the problem that we've got into is that our public, certainly in the West, has thought that the policy of governments was to eradicate the virus. It's not possible to eradicate it. You're going to have to live with it. But the challenge in living with it is that it's significantly more serious than the ordinary flu, even if it's not the bubonic plague, as it were. So the question is, what is the right combination of things that allows you to reduce significantly its severity? And that is around vaccines and therapeutics.
Thank you so much for your time. Tony Blair, the former UK Prime Minister. We'll have plenty more, of course, on COVID and the economy. This is Bloomberg.
其实它本质上就是线下。
Offline sales will recover to a better level in 1 or 2 quarters. But if we only look at online sales, I believe it's already returned to normal.
Well, that was Alibaba's vice president speaking at the annual Singles Day, beginning with a bang, sales blowing past last year's record. However, Chinese crackdown on tech giants has also wiped almost $260 billion of market value in 2 days. Tencent and Alibaba leading the sell-off. Now, the focus is firmly on the markets. The focus, of course, is firmly on the kind of rotation that we saw. A reminder, treasuries are closed in the U.S. If you look at European stocks, they're definitely advancing on cyclicals. Now, cyclical industries on the up at the expense of technology shares. I'm also looking at crude oil rising, bonds slipping. Now, the picture a little bit brighter for U.S. technology futures. And again, the risk-on sentiment that buffeted sovereign bonds fell in Europe, and Treasury futures also slipping. Now, coming up, it's our weekly show, ETF IQ Europe. That's coming up next, and this is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Bloomberg ETF IQ Europe. I'm Francine Lackwin. Over the next 30 minutes, will be your guide to the region's thriving market in exchange-traded funds. Everything you need to know about the funds and the flows. A record rotation optimism for a post-pandemic recovery sees investors pile into underloved sectors while defensive bets crash. We'll monitor the moves. Is it time to buy then as the dust settles on America's election? We'll discuss how investors should position for a Biden White House. And after gold tumbles on vaccine optimism, European ETFs tracking the metal continue to see inflows. We'll discuss the prospects for one of 2020's most popular assets. Well, hi, everyone. We're going to have a packed show. But first up, let's take a look at which countries and sectors have been attracting the money. Danny Berger's here with the details. Hi, Danny.
Hi, Francine. That's right. I've got FFLO up on my terminal here. And you can see that for European tracking ETFs over the past week, we've seen net outflows, 400 million to be exact. This is interesting after a week where we saw the stock 600 rise 7%. The worst region was the Nordic region. But I really should say, when you see $141 million worth of outflows, this is really concentrated on one singular fund. It's a high dividend, low volatility fund. Low volatility has not been doing very well as a strategy over the past week as investors go more towards those cyclical and volatile names. You also see, though, this buildup of outflows in Germany and France and Italy and Spain. Sure, that could be coronavirus fears. It could be taking some profit after the rally we saw. But regardless, flipping to outflows after we actually saw some solid inflows last week. Finally, I should just point out, United Kingdom seeing some very, very slight inflows today. That's all thanks to some stock funds. For the most part, gilt funds have been seeing outflows over the past week, but really stocks helping that bring it back, though it doesn't help fix the picture we're seeing where investors in European ETFs have, for the most part, withdrawn their money over the past week, Francine.
Danny, thank you so much. Our Danny Berger there. Now, it has been quite a week for investors. The biggest exchange-traded fund in the world added just shy of $10 billion on Monday as markets jumped on news of coronavirus vaccine progress. State Street's S&P tracker saw one of the 3 best days in more than a decade. Now, as well as a surge of new money, there was also a breathtaking rotation, investors dumping tech and buying into some of the most beaten-up sectors of the market. Well, joining us now to discuss the moves and how they're showing up in the ETF space is Sam Potter. He's our senior editor at Bloomberg who oversees ETF coverage. Sam, thank you for joining us. If you look at the SPY flow, quite something, but this wasn't just indiscriminate buying, was it? Let's get to Sam.
Good morning. No, it wasn't. As you just mentioned, it was one of the 3 biggest inflows in a decade. It was more than 10 times the nearest competitor on the day in terms of inflow. Now, when we see that kind of volume, that kind of inflow into a broad stock index like the S&P 500, you could say immediately indiscriminate buying. People are just going risk on and they want in stocks. But as you heard Danny talk about just now in the flow picture, and as you yourself have mentioned, that's not the case. All year long, a bet on the S&P 500 has really been about tech stocks, which have dominated the gauge and driven the gains. And this time, what we have seen is a move away from that. And if you look under the surface of that eye-catching 10 billion and look at some of the other funds getting inflows, we saw XLS, that's the financials ETF. We saw XLI, which is the industrials ETF. Both had the best inflow since June on Monday. Jets, the airline ETF, that surged so fast that there was a disconnect in the pricing. It ended with a premium of 1.8%, which was the highest since March. So what we are seeing is bets on a more broad-based rally, this rotation to cyclicals, the vaccine news causing hope that actually some of these beaten-up sectors are going to revive.
Sam, plenty of cash chasing equities. Does this mean we're finally seeing some of the huge flows into fixed income ETFs reversing?
Well, this is the fascinating picture. Obviously, all year long, we have seen a pretty strong bid for bond ETFs. The inflows hit a record for the first time ever. Inflows into bond ETFs in the US may actually beat inflows into equity ETFs. And you would expect with a big risk-on move like we're talking about that maybe some cash would be coming out of those bond funds. In the event, what we see, there's been a small exit from government funds, but it's minor in the scheme of things, and their bonds are still recording inflows overall this month. What's that telling us? It's telling us about the election result and the consequence of that. Monetary stimulus, because we may be looking at a divided Congress, the chances of a large fiscal stimulus have dropped. That puts all the onus on monetary stimulus on the Fed. That means low yields and asset purchases. That makes bonds still a secure bet. At the same time, we still have risks around us. We still have COVID. We still have the election to be finally settled in terms of whether there's this blue wave or not. So investors are not yet ready to completely abandon the sort of safety of bonds.
Thank you so much, Sam Potter there. Bloomberg News. Now joining us today is Keshava Shastri, Head of Capital Markets at DWS. Keshava is also Chair of the ETF Committee at the Investment Association. Keshava, thank you for joining us. When you look at the big market moves, actually, that we had on the back of the U.S. politics, on the back of this rotation, how does it play out in the ETF world?
Yeah, thank you, Francine, for inviting. Great to be here. We've had an amazing year, actually. We've seen we're on track to have a record year this year. We're up nearly 12 billion in net new assets. And the price action, it's interesting that you mentioned and also what Sam mentioned. Some of the news on the vaccine has been coming out and the market reaction shows that some of this already been priced in. But the vaccine still has a few more steps to go through before mass public distribution, and might not see mass production before end of the Northern Hemisphere winter. But on this basis, we probably assume there'll be cyclical industries that could benefit a lot from this, who are the initial kind of the losers in the early pandemic, the leisure, the hospitality, the airline. But when we speak to clients now, they're really looking at coming back into those kind of sectors, some of our world sector funds and the US sector funds as well. And there is what Sam interestingly mentioned, there is a equity flow coming in that we've seen, especially like some of our China products. There's what you mentioned with the election results, there's probably better trade relationship. So our China fund, with more than $1 billion now, significant inflows, and also really strong proactive discussion with clients to look at how they get into that, both on the equities, but also bonds as well. So it looks like more of a risk on, and also on our credit ETFs as well. We're seeing inflows in our fixed income. So to what Sam mentioned, we're not seeing outflow from fixed income to equities. It's actually equity having inflows, but also fixed income also having inflows. And the interesting is also the ESG. Right. When the market moved down in March, April, people went out of the core benchmarks, but they're coming back in through ESG, which has been a big benefactor as well.
Keshava, can I just get back to some of the markets rotation that we saw? Do those moves, are they actually led by ETFs, or do ETF moves then follow?
I don't think, we've done a lot of empirical evidence on this. I don't think, obviously ETFs price comes from the underlying basket, but, ETFs are not big enough to have a huge impact on the underlying. I think the market makers that you see will look at both those angles. I don't think it's quite right to say that ETFs having a massive impact on the underlying basket itself. But obviously a significant demand in ETF coming through, the market makers will hedge it using the underlying basket to make sure that they provide best execution for clients. So it's not like one is, in the ETF is having a negative impact at all. It's actually, in many cases, it's providing that 2 layers of liquidity that the market has been talking about and the issuers are talking about.
Keshava, thank you. Keshava Shastri there from DWS stays with us. Now, coming up, what does a record rotation mean for quant strategies, and how should investors be positioned for a Biden presidency? We'll discuss that next. Hong Kong's opposition bloc has resigned en masse Wednesday. This is after China moved to disqualify lawmakers who aren't deemed sufficiently loyal. That's one of Beijing's strongest actions yet to quash dissent in the territory. This is huge. It will have, of course, repercussions across the world. We'll be live in Hong Kong shortly. This is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now, how should investors position for a Biden White House? And what does the rotation mean for quant strategies? Let's get more with our Danny Berger. Danny, what strategies have been doing well through all of this?
Francine, there's this really interesting push and pull between the momentum and the value story. There had been some repricing out of value after the Biden win, though his hopes for a blue wave faded, which was said to have really benefited value. But as the week unfolded, here's what the flows ended up looking like. And that's some pretty sizable outflows coming from low volatility. So this is more or less a bond proxy bet. It's going to be doing better in a lower yield environment. However, with the vaccine news, you see the cyclicals outperform, more volatile stocks outperform. So we get these outflows coming from low volatility. Now, when it comes to inflows, size hits the top over the past week in terms of smart beta flows, seeing $156 million worth of inflows. So this is smaller cap, riskier stocks. Again, these are the kind of equities we saw investors really rally to after the positive vaccine news, with hopes that we'd get a resurgence. And although momentum got hard hit, both globally and in Europe, momentum ETFs still saw inflows, more than $100 million worth of inflows. I should say that contrasts with value, which only saw half of that amount. So at least ETF investors over the past week still going with the old reliable momentum trade, perhaps not necessarily convinced that value is the place to be, though I should say a lot of strategists say European cyclicals, European value will do better under a Biden presidency, given perhaps more softer trade relations, less tension, which should benefit a lot of European industries. Francine.
Danny, thank you so much. Our Danny Berger there. Still with us, Keshava Shastri from DWS. Keshava, when you look at what happened in terms of money flowing maybe into gold and other parts of asset classes in the ETF space, actually, does the market become more sophisticated in dealing with political turmoil? It could be the U.S. election, or it could be something happening in Hong Kong.
Absolutely. We see, clients really, especially in Europe, 80% plus of our clients are institutional clients, and they're engaged very actively with us on the capital markets team, but also on the sales team, to really look at how do they position this. When we saw this during the Brexit day, the elections in 2016, and even this year, we came into the office much earlier than normal market hours to really help clients get that exposure, whether long or short. And that's the other thing that's happening in the US. Hedge funds have been a lot more active for the last decade plus time. But in Europe, they're slightly a bit behind. But in the last 2-3 years, they've really been using the advantage of ETFs, intraday trading, going long, but also going short, to put on those strategies. And what kind of Danny mentioned about the short-term quant guys. On Monday, they pretty badly got hurt on playing the long momentum, which has been very much the long tech recently, long tech, but also short value. But short value also was played as a long momentum game because the value was kind of going down in one direction. So and that reversal on Monday had a significant impact. And we saw clients using some of our ETFs to really play that and make sure they were able to either hedge or also put into the new position. But to what Danny mentioning, that there are still people looking at this is still a short move, but they can really come back in again and use that strategy of kind of being long momentum. But it is whether if it's gold, again, gold has been a very big trend. You mentioned at the beginning. We have a $10 billion kind of commodity platform, and the gold is like $8 billion between different currency hedging products that we have. And that's been really used, and also between currency hedging, looking at if it's euro or sterling, people's expectations. So people are rotating between currency hedge products of either if it's commodities or if it's kind of even equity and fixed income, to really play that political landscape and how that has having an impact in the marketplace. But that sophistication of using not only for long-term, long exposure, but using more tactical trades is significantly increasing in Europe, and more hedge funds and smart money using the products as well.
But Keshava, so the more the money is using ETFs in Europe, how will it actually change the markets? Again, one of the themes that we try and explore is that it's still very nascent in Europe compared, for example, to the ETF market in the US. Does it really catch up, or at least try to catch up, in these kind of very volatile and very difficult times for the markets?
Absolutely. Actually, you mentioned at the beginning, as the chair of the IA, after the March volatility, we put out a paper from the industry to really look at how that market behaved and how clients use the products. And because it's an institutional client base, they use it very sophisticatedly. And what we saw was that, like in the US, in Europe also, the use of ETFs increases significantly as volatility really increases materially. And obviously in US, you have some of the structural evidence supportive of like tape, and there is a single consolidated tape and completely visible volume, which also is there now after MiFID II. You have the post-trade transparency, but the data is not as easily visible because there's no consolidated tape, and we as the industry body are working on that. But when you look at the empirical evidence, and again, happy to go more into detail to anybody else has questions afterwards, but the empirical evidence does show, even in Europe, the increased use of ETFs is increasing throughout when the volatility comes in. It is not just a product that's used during calm period, but if you look at all of our peers in the industry, the client both the conversation but also use is getting broader and deeper in terms of the size of products. We see even during the height of the crisis in March, April, we had 500 million buy orders coming into our dollar credit and some of those funds, which in other wrapper products we're actually seeing outflows or significant trouble. So it is increasing in Europe. With a fragmented market, Francine, as you mentioned, it's harder to get to the detail or get the full picture quickly. But there are experts teams like capital markets teams in issuers that we can get to that product information.
Keshava, thank you. Keshava Shastri there from DWS stays with us. Coming up, news of a vaccine breakthrough saw the gold price slump the most in 3 months earlier this week. So why have European funds continued to see inflows? We'll discuss that next and take a look at this week's ETF winners and losers. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's take a look at this week's winners and losers with our Danny Berger. She has your ETF leaderboard. Hi, Danny.
Hi, Francine. Over the past week, what we've seen in funds and flows in European-listed ETFs really reflects some of the greater euphoria we saw in markets to kick off the week, reflecting the news that there's progress on a coronavirus vaccine. Much like in the U.S., we saw the biggest S&P 500 fund see a record day of inflows. The best fund in Europe over the past 5 days was also an S&P 500 one. European bonds and European stocks also hitting the top of the leaderboard. I should say in the corporate bond space, everything from Ryanair to Unibail, the Westfield Mall owner, saw their corporate bonds rally with this optimism over cyclical growth coming back to the European region. Now, flipping over to the outflows, we see the opposite. You see some of the safer investments, investors pulling money from those. That ex-tracker government bonds one, I should say, saw its worst day on Monday since April. So a lot of those safer trades really losing some steam. Interesting, though, that the MSCI World Index saw funds pulled from it, given that the All-Country World Index this week hit a new high, though the U.S. Minimum volatility certainly fitting that theme of buying riskier assets away from safer assets. We talked about this earlier in the show, that minimum volatility was one of the worst factors over the past week when it comes to flows. I should say so bad that Natixis even closed one of its minimum volatility funds, saying that they didn't have enough assets in it. Investors really just not interested in that bond proxy at the moment, Francine.
Danny, thank you so much, Danny Berger there. Now, news of the vaccine breakthrough saw the gold price slump the most in 3 months earlier this week. But while the biggest American gold ETFs saw heavy outflows, the two largest European funds saw substantial inflows. Now, that left net global ETF gold activity fairly flat overall. So what does 2021 hold for one of the year's most talked about exchange-traded products? Still with us, Keshava Shastri from DWS. Keshava, maybe if you don't buy gold ETF, if something goes wrong in 2021, is there something else that you would buy?
I think there is gold has definitely been in big vogue, and there is a big trend that's been happening from futures to gold product and silver futures to silver ETCs or ETPs. This year, as you rightly said, more than 10 billion money has gone into gold products alone. So that's been a trend for 2021. I think when we speak to clients, the large institutional clients, what's on their mind, I think ESG is definitely a big focus for them, and also kind of fixed income. With the market being so much larger, so we're looking at how do we provide that kind of exposure to clients, but also then be putting fixed income and ESG together. So we've launched quite a few products recently on dollar corporate ESG, short duration US ESG Euro corporate. So that is a big theme. And what kind of Danny mentioned about some of these MSCI World and some of the outflows, we're seeing clients getting out of those core range non-ESG into actually our ESG range. So that's been a massive trend. And I think when we speak to clients actively and even internally for our own, at the firm level, our big priority is ESG. So that'll be a key thing to kind of look at. But also on the currency hedging, as some of these kind of volatility kind of cuts in between Brexit or maybe other things, we're seeing a lot of clients playing that in currency hedge exposures to adding to that.
Keshava, thank you so much for all of your time today. Keshava Shastri, their head of capital markets at DWS. So certainly a lot going on in the markets and a lot going on in the ETF space. Now that's it for this week's Bloomberg ETF IQ Europe. Yes, we will be back with more next Wednesday at 9:30 a.m. London time. Of course, we'll have the latest on leaderboards. We'll see the week that was a lot of focus, of course, not only on gold products, ETFs, but one of the main questions, what happens to liquidity and what happens to volatility in the markets from here until the end of the year. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television. Joe Biden says Trump's refusal to concede is an embarrassment as the White House stalls the transition. Secretary of State Pompeo even talks of a second Trump administration. Biden's Brexit warning. The president-elect uses his first call with Boris Johnson to reaffirm his support for the Good Friday Agreement. And risk-on rotation to move out of tech names picks up steam. A Chinese crackdown on tech wipes almost $260 billion in 2 days. Alibaba and Tencent sink. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London, Tom Keene in New York. Tom, of course, we'll look at live pictures on Armistice Day. I think we have live pictures coming on from Paris, but I think we also had some live pictures from Hong Kong. And Tom, in the last 15 minutes, something that could be quite significant on Hong Kong is the fact that actually some of the opposition has quit to protest some of the powers coming in from China. And this was after China moved to disqualify certain lawmakers who are not deemed sufficiently loyal. And so the opposition bloc in Hong Kong resigned altogether this Wednesday.
Well, the present news from China, but it can wait for Armistice Day. This in Paris, the Champs-Élysées. And the Arc de Triomphe, obviously early 19th century, but not known, the first eternal flame was lit in the Western world in centuries and centuries in 1920 beneath the Arc de Triomphe, and starts an interesting day for remembrance worldwide. Of course, in France, there's always a tone here of the cost and the price of World War I. Francine, I would say that this dovetails with a Remembrance Day of an aging queen in the United Kingdom. And over in the United States, overnight, Francine, there will be no focus on Armistice Day. There is absolute chaos, no other way to put it, at the Pentagon with the resignation of the Secretary of Defense. So it is a very different Remembrance Day this year.
It is, Tom, also because the coronavirus pandemic, of course, is limiting public services. So a lot of people are respecting the 2-minute silence. In the UK, it usually falls in an hour from now. But you're right, there are so many things that people are thinking about because a lot of the uncertainty in the U.S. politics. But again, we remember the fallen on Armistice Day. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. President-elect Joe Biden calls President Trump's refusal to accept the results of the election an embarrassment. The president won't allow his administration to cooperate in the transition of power, and Biden isn't getting the intelligence briefing that presidents-elect normally receive. Biden says the president's actions won't help his legacy. President Trump is quickly remaking the Pentagon leadership in the wake of the election. A day after the president fired Defense Secretary Mark Esper by tweet, 2 senior Pentagon officials stepped down. So did Esper's former chief of staff. Trump allies are poised to take acting roles. Critics say that sends a signal of turmoil in the military leadership. The coronavirus is roaring back in U.S. cities. That comes after a couple months of the disease being essentially a rural problem. According to the CDC, metropolitan areas are now averaging a daily record number of cases. That has meant rising cases in and around Denver, Detroit, and Chicago. The virus is also mounting a comeback around Boston, Newark, and New Jersey. In Hong Kong, opposition members of the legislature quit after China moved to disqualify unpatriotic lawmakers. It's one of Beijing's strongest moves yet to put down dissent in Hong Kong. The government ousted 4 lawmakers as soon as China passed the law. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine Tom.
Ritika, thanks so much. Let me look at the data right now. A lift in the equity markets with the bond markets closed here on November 11th. Futures up 24. Dow futures at level 29,507. So some real resiliency away from big tech, and even big tech does better today with the NASDAQ 100 up. The VIX comes in 24.29. Now, I don't have bond quotes, but I have a final quote on 10-year at 0.9753. That's not a live quote, but nevertheless, that shows over the last 48 hours how we've nudged up on the 10-year yield. A little bit of dollar strength today. I don't want to oversell that. I mean, the euro 117.89. Francine, help me.
Stocks are advancing in Europe, Tom. Investors continue into this rotation into cyclical industries at the expense of technology shares. Again, we look at companies such as internet firms and, of course, fintech giants in China, because the tech sell-off deepened after China's crackdown. So that's a story that we're going to follow very closely. But again, you're absolutely right, Tom. If you look at the risk-on sentiment, it definitely buffeted sovereign bonds, which fell in Europe, and then treasuries are closed today because of Veterans Day. But you're right, treasury futures also sleeping, Tom.
We have a wonderful guest to get us started here, but first, with the tumult of the last, I want to say 24 hours, but I believe it's Tuesday. There was an election a week ago. Let us listen to the president-elect.
I just think it's an embarrassment, quite frankly. The only thing that, how can I say this tactfully? I think it will not help the president's legacy.
Very good. Mr. Biden speaking yesterday, and of course the news flow. And again, folks, the news flow late into the evening in Washington and overnight has been extraordinary. We'll bring you up to date on that as we look at economics, finance, investment, and yes, this political season. There is Christine Lagarde now holding court in Frankfurt. Christine Lagarde of high school in Washington, D.C. And then there is Wolfgang Ischinger of Germany, who's had high school in Illinois, and after that, Tufts, of course, in their acclaimed Fletcher program. We're thrilled that Wolfgang Ischinger could join us this morning. He is the former German ambassador to the United Kingdom, the Court of St. James, and of course to the United States as well. Ambassador, what a most interesting time to speak of a world in danger. Define that within your book. What is the new danger this world faces?
Well, thank you for having me on your program. I think this is the best moment we can ask this question. When I finished editing my book, World in Danger, I did not know that if I had to rethink the title today, I would probably want to say World in Great Danger, because many of the certainties which we in Europe, and maybe also you on the American side, which we have been taking for granted, seem to disappear as we speak. What about the protective umbrella that the United States of America has made available to Europe for the last 70 years? Is it there to stay? Or, as President Trump suspected, is it no longer necessary or useful for the United States? What about the ever closer union of the European Union? A principle with which I grew up as a young diplomat for the last 40 years. Brexit demonstrates to us that the ever closer union is not a given. And what about, China and possibly Russia as responsible stakeholders? That was the idea that we pursued not so long ago. Quite obviously, China and Russia are not going to want to be responsible stakeholders in the kind of system that the United States with her allies created after World War II. So things have been falling apart. And this is a dangerous situation because it invites conflict, it invites misunderstanding, it has created enormous mistrust.
Right. The Chancellor of Germany, I believe, is 59 years in holding. We all know that. And of course, she has been elegant for 14 years, moving on 15. Ambassador, I'm fascinated what you think of a Trump at 74 and now a Mr. Biden soon to celebrate his 78th year. Are you worried at all about a physical energy to do the exhausting work of diplomacy?
You know, I'm over 70 myself. My own experience, speaking personally, is that if you have a challenging mission in which you believe, it doesn't really matter whether you're 25 or 75. You're gonna give everything you have, and you're actually going to wake up earlier each morning because you want to get things done. So I don't really think, unless there is major sickness coming in, I don't think that you can't carry out this kind of mission at age 75 or 78 or so. Of course, you're going to get tired a little earlier, but you know, having watched President Trump over the last 4 years, he has found sufficient time to go golfing and to relax and to recover. And I don't see why the next president can't do the same thing.
Right. Ambassador, what's the easiest thing that Joe Biden can do to try and bring back trust within the international community?
Just be himself. You know, we know him. He's been around for 40 years. Every sitting European head of state or prime minister, with very, very few exceptions, knows Joe Biden, has met in Washington or at our conference, at the Munich Security Conference, where he's been a frequent guest, et cetera, et cetera. So he is a known entity. People trust him. They've known him for a long time. He was the vice president of the United States for so many years. So if he just acts as Joe Biden,
right,
he is a living trust-creating, confidence-creating measure.
But, and Ambassador, you know, Joe Biden has recently said a clear message to his allies, which is we're back. Can the U.S. really be back, especially in this transition period where everything seems to be contested, where the Trump administration also thinks that actually possibly they've won this? And frankly, just by the sheer number of Americans who voted for Trump, how difficult is it for allies to believe that the U.S. is back to, you know, the pre-Trump world?
Well, I don't think he meant to indicate that we're going to go back to some kind of transatlantic paradise that actually, you know, never really existed. We've always had contentious issues. So I think there is no return to the former relationship. But what we can and what we must do, we on the European side, is to make an offer to the next American administration. We cannot now, knowing that this was a hard-won election, that there are 70 million Americans who did not vote for Joe Biden, we as the European Union, we as Europeans, we should make an offer to the United States, offering cooperative arrangements, for example, on the issue of how to deal with China. On the question of what kind of burden sharing above and beyond the famous nasty 2% of GDP expenditure for defense, what kind of burden sharing can we enter into that would make the burden for the United States a little less, and maybe carrying a little more responsibility by the Europeans? So it's a new world, a new relationship, and we Europeans need to behave as adults and have an adult relationship with the United States.
We will continue with the ambassador here, of course, Munich Security Conference Chair, the former German ambassador to the Court of St. James and also to the United States. It is November 11th. It is Remembrance Day, different names in different nations, but something in common, which is a somber moment for all, considering back to World War I and on to other conflicts as well. Mr. Macron at the Arc de Triomphe.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Those are live pictures of the French President, Emmanuel Macron, of course, remembering November 11th. A lot of the focus will be on France with the head of state, continuing, of course, this Armistice Day. Now, in France, it is normally marked by a parade in Paris and events around the country, of course, with the nation under lockdown. This year will be very different, but they're hoping, of course, this is televised, so they're hoping that a lot of people are joining in from around France. Maybe a special significance for a lot of the Frenchmen and French women that suffered because of the world wars. Now, still with us is Wolfgang Ischinger, Munich Security Conference Chair and former German ambassador to the U.S. Thank you so much, Ambassador, for staying with us. We were just looking at live pictures of the armistice, where really, our collective memories remember at a time where the world was divided and split. Given what we've seen over the last week and the fact that you have countries such as Russia and China not having congratulated President-elect Joe Biden yet, what does it tell you about the state of the world?
Well, I would not overestimate their hesitation. You can argue, and I'm sure people have argued in other Western capitals also, shouldn't we wait with our congratulations, with our messages, until it's really official? But then, of course, when you think about it, that would mean that you would want to wait until the Electoral College has met, which is like in a month. So then people said, no, when the news media announced the winner, we will congratulate. I can understand. I don't like it. I don't appreciate it, but I can understand that some would want to wait until some kind of official result is announced and once all the votes are in, is it a great sign of future cooperation between China and the United States, between Russia and the United States? Probably not, but let's wait and see. Leaders can get together, and I would think that a future President Biden will, I've known him, I've seen him work. I think he will find a way to connect to Vladimir Putin and to Xi Jinping over time and work things out.
Ambassador, I grew up in a house that revered Konrad Adenauer. He was ancient and lived and worked very much into his 80s as well, dying in 1967. There is a memory of these wars, this World War I, this World War II. Is the next generation, have we just given up those memories? There is a transition going on. How will it go if we don't have a collective memory?
I think you're addressing a very, very important question. By the way, when I served as a German diplomat in Paris in the 1990s, in the early 1990s, up to those years, no Germans had ever been invited to the official celebrations at the Arc de Triomphe on this Armistice Day, because of course we were the enemy then. And then the French government in the early 90s changed their policies and invited Germans, including even Germans in uniform, to participate. So that is, reconciliation between two former enemies. And that's what makes our job, the diplomatic job, so fascinating, that you can actually reach out and grab your enemy's hand, your adversary's hand, and make peace. That's what it's all about.
Ambassador, thank you so much for joining us on this Remembrance Day. Wolfgang Ischinger, the former German ambassador to the United States and to the Court of St. James in Britain as well. Speaking of the British, we will move well across the globe. We do that on this day. Futures lift as well. The bond market closed in the United States for Veterans Day, as we call it. Lord Patton will join us, the former Hong Kong governor. We are fortunate here, and there is terrific news flow out of Hong Kong this morning. Worldwide, it is Armistice Day. This is Bloomberg.
sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Bloomberg's learned that Italian payments processor Nexi is close to a $9 billion all-stock deal to buy Danish-based rival Nets. It would be the latest acquisition in a rapidly consolidating industry. Nets is backed by private equity firm Hellman and Friedman. Bloomberg's learned that Airbnb's long-awaited filing for an IPO has slipped to next week. The home-sharing giant had planned to file on Thursday, but it decided on a delay to keep from being overshadowed by the U.S. election. Airbnb is planning to raise as much as $3 billion in its debut on the NASDAQ. China's ByteDance has asked a U.S. appeals court to intervene in that forced sale of the TikTok video sharing app. The Trump administration has ordered ByteDance to sell TikTok by Thursday or else face a ban in America. The government has cited national security grounds. ByteDance is seeking an extension of the deadline. And that's your latest Bloomberg Business Flash. Tom.
Ritika, thanks so much. Equities, not bonds, currencies and commodities. The bond market closed in a quiet to the tape as the dominant fixed income market really is not doing all that much. In the U.S., futures green, up 26, Dow futures up 218, and the VIX 24.22. I do have a final quote on a static 10-year yield, 0.9753. That's a big deal. That's migrating out from 0.94 over the last number of days. 1% in vicinity. Francine?
Tom, the focus is, of course, on this rotation. The focus is on some of the other things that we're watching, including, this Hong Kong opposition actually quitting en masse to protest these new China powers. Now, on the markets, I'm looking at the Chinese technology companies retreating, and that's having an impact here in Europe. You can see they're still getting some 0.5%, and this is really some of the shares, including utilities, the defensive, staging a comeback in Europe. So we'll have plenty more, of course, on the markets. We'll have plenty of more on the economy and COVID. Up next, Christian Keller, Barclays Head of Economics Research. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
We are already beginning the transition. We're well underway. And the ability for the administration in any way by failure to recognize this our win does not change the dynamic at all in what we're able to do.
That is, of course, U.S. President-elect Joe Biden vowing to go forward with the transition of power regardless of Republicans' efforts to challenge the results. Well, to talk about politics and, of course, the impact this has on the markets and on our economic outlook is Christian Keller. He's Barclays Head of Economics Research. Christian, thank you so much for joining us today. We had so much news in the last 10 days or so. Partly it's U.S. politics with a new administration that should take charge in January. Partly it's with news of the vaccine. If you look at the economic outlook for next year, what will be the most significant change that we've seen that will impact your forecasts?
It has been quite a roller coaster. I mean, we did go into this election with the polls telling us it would be a blue wave and markets preparing for a $2 to $3 trillion fiscal stimulus. Then we came out of it seeing that this is not happening. Markets reduced their expectations for the fiscal stimulus. And then suddenly the news on the successful vaccines coming possibly sooner and even more more potent in a way that was anticipated just 2 days ago. Now, I would say, though, even though that was packed with very important news for the global economy, I think the vaccine is really the biggest game changer. We can talk about policies all we want, but they're just trying to aid us in a situation where the global economy is going through a rough patch because we are, to some extent, locking down activity that otherwise would be there. And the vaccine is really the game changer here to bring us back to normalcy.
Is there a danger, Christian, that we're putting too much hopes on the vaccine? I'm not saying that it won't arrive, but it could be delayed, it could be longer, it could protect you for a limited amount of time. And is there a danger that actually policymakers aren't ready for that? And so once let's say second quarter of next year, we see a big disappointment, and that really moves the economy into a double-dip recession.
Well, I think that there are dangers to this entire crisis because, it's driven by health. It's something, we are only slowly starting to understand. Obviously, in particular, markets have been moving around very sharply. They now anticipate that this being, a very effective vaccine coming and others maybe on the way, and that this was more or less end, the whole COVID episode. But you're right, we could end up with something where suddenly there's some backtracking or more negative news. I would say to some extent, we will have a double dip already because Europe and the UK will experience negative growth this quarter, in the fourth quarter, and that comes after a very, very strong third quarter. So I think that double dip we have, it's now all about how much recovery we can see in 2021. And, there, I think markets at the moment are rightly so anticipating a much better outlook than we had earlier. But as you point out, it's really something out of my expertise to forecast, to what extent there could be on the health front suddenly, bad news that we didn't anticipate right now.
Christian Keller, gridlock is something comfortable to politicians. You have it brilliantly in your Barclays note over in Divided We Trust. The idea of American gridlock, we see it in the United Kingdom this morning with the Brexit delay, the can kicketh down the road again. Are we in a Western world, indeed a global gridlock?
Well, I think there is some hope that a new administration in the U.S. With maybe a more traditional view on transatlantic relationships, on multilateral relationships, would actually maybe help to overcome some of that gridlock. I think at the moment, it's right to point out that in many ways we are stalling in some of those important negotiations and relationships. I think there's a hope that, as I said, with the President Biden, to return some normalcy also on that front, and that, one can then start to, improve some of these relationships, be it between the US and Europe, be it between the US and China, be it on the WTO, on climate deals, etc. So I think that is a hope. But I think you're right that at the moment, or the last few quarters really have been characterized by, somewhat of a gridlock and little progress.
What is the vector right now in world trade? I really haven't had an update in the last 90 days on just the spirit of world trade, the pandemic rages, etc. I mean, what is the direction there on units of export?
Well, Tom, world trade is actually doing relatively well in the sense of, the direction has been really sharply increasing, obviously from a very, very low base. But what we have seen is somewhat a split recovery, whereby, the entire universe of services has been starting to slow down already in September, October, while the manufacturing of goods, which are globally traded, has actually been on a very strong footing. China kept producing good export numbers. Global manufacturing in countries like in Germany and others, kept being quite strong. And typically manufacturing is very closely related to global trade. So that was actually the one element that has been continuing to recover when we already had indication that the second wave of infections were actually weighing on the very important service sector in many economies.
Christian, thank you so much. Christian Keller there of Barclays stays with us. We'll have plenty, of course, on China and other parts of the world. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. Former federal prosecutors say Attorney General William Barr may make President Trump happy with his election fraud probes, but they say it's unlikely to change the result. Barr has set a high threshold on irregularities for investigators. At the same time, though, there's concern that the probe could undercut public support for Joe Biden. Mike Pompeo isn't acting like a lame duck Secretary of State. Pompeo warns that the U.S. is not finished yet when it comes to acting tough on China. In a speech to the Ronald Reagan Institute, he called the Chinese Communist Party a Marxist-Leninist monster whose rule is authoritarian, brutish, and anti-ethical to human freedom. President-elect Biden has warned British Prime Minister Boris Johnson not to compromise peace in Northern Ireland whilst pursuing Brexit. The two spoke yesterday. Biden reaffirmed his support for the 1998 deal that put an end to the violence in Northern Ireland. According to a British official, Johnson promised that the UK would uphold the peace agreement. And the Federal Reserve expects to join the club of central banks set up to fight climate change. The network for greening the financial system requires members be signed up to the Paris Climate Accord. President Trump withdrew the US from the pact, but President-elect Biden has pledged to rejoin. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. A nice lift to the market. Futures up 26. It is a good conversation always, peer-to-peer. David Rubenstein of the Carlyle Group and their co-founder. He'll be with us this morning to speak forward on his many conversations. This is Bloomberg. Good morning.
we're heading in the wrong direction. Over the next 2 quarters, I'm very optimistic that we're gonna grow at very strong rates. But a real downside over the next 2 quarters is, does the resurgence get so bad it forces lockdowns because of overwhelmed healthcare systems throughout the country? That's what we're watching for.
Right.
That's a real risk. Our own sense, and we're watching this very carefully, and we do it through bank balances and other ways, our sense is the savings from that fiscal stimulus starting to run out. We don't know exactly when it will run out. When it does, incomes will start to drop and consumer spending will start to weaken. And so that it starts with, and probably the highest priority is some continuation at some level of the unemployment benefits.
The gentleman from Dallas yesterday, I was all zoomy, Francine. It was Mr. Kaplan of the Dallas Fed. And I'll tell you, I don't know where this is going in 5 or 10 years, Francine. The turnout was extraordinary. It was well in excess of 200 people, probably double what they would have gotten into the offices at 67th and Park Avenue. Vincent Reinhardt showed up, a number of professors that knew Mr. Kaplan from his days at HBS. And what do you think, Francine? I mean, Zoom's here to stay, right?
Well, first of all, I was going to say congratulations and welcome to the 21st century, Tom. I know a lot of the stuff has been virtual. I mean, you have been outstanding on Twitter and a lot of social platforms, but this is like, you know, a different kind of Tom Keene. I think a lot of people think it's convenient because they do it from the comfort of their own home. But remember, the social capital, I think people miss also seeing each other face to face and actually networking. It'll be interesting to see Davos, which I think, it's not Davos. Do we still call it Davos if it's 3 months afterwards and not in Davos, Tom?
I don't know.
But the World Economic Forum is expecting to be one of the first places that we meet in person.
Yeah, I mean, there's that. And then also the IMF, of course, in Morocco canceled as well. We'll see where we go. And seriously, folks, the pandemic has really deteriorated in the United States in the last 2 days. We continue with Christian Keller of Barclays. Thrilled that he's with us. Christian, how do you fold this resurgence of the pandemic into your Excel spreadsheets? I mean, the statistics in the United States, essentially we're back to May, if not late April. That is not good. How does that adjust your outlook?
Well, it's very interesting because on the one hand, you need to follow the infection rates, and then you have to figure out what the policy response and the political response will be to it. So it does seem that, for example, we do see some differences between the US and Europe, where in Europe, once you reach higher hospitalization rates and politicians become concerned about emergency or intensive care units being filled up, there are very sharp reactions of the willingness to lock down economies. In the US, that seems to be different from state to state, and we have so far seen actually less reaction than we probably would have seen with same rates in Europe. Now, I think there is a risk, as we heard earlier, that if the US continues with these increases and the vaccine not coming yet or needing a little bit more to be properly implemented, there may actually be a situation where the US, with a lag, needs to do similar measures to Europe, not as harsh, there won't be anything national, but on a state level, on a localized level. And frankly, we have to adjust our forecasts each time, and we do it sector by sector to see which sector is, how much affected. We already found out that the shares of sectors in this lockdown, the current lockdown, is less than in spring, but it's a very tedious exercise if you want to try to do it as best as you can.
Yeah, one of the statistics, folks, U.S. hospitalizations, again, not focused on the East Coast in New York, but across the great Midwest and out to California, are back to April 15th levels, which is really something. There's 62,000 hospitalized in America right now. Christian Keller, on Europe, you mentioned earlier the true slowdown. Mr. Kaplan of Dallas notes a very difficult 2 quarters. How do you extend out the slowdown in Europe? Do you dare go out to Q2 or Q3 of next year?
What we currently have is a significant, actually negative growth, not a slowdown, but an actual contraction in the fourth quarter. And then relatively little momentum in Q1 and Q2. What then, of course, mathematically, is it gives you very low base, which you go into 21, and then you have a very, very poor carryover. And that means that, growth in Europe in 21 could be, disappointingly low. I believe that has now changed somewhat, that outlook with the vaccine. I do think the first quarter will be difficult to really accelerate a lot, but I think with the vaccine and with the optimism that may bring, I think we could see maybe better numbers than what we have now in the second and third quarter. And households will play a big role. I think Mr. Kaplan said that earlier. Those household savings are very high. If households feel confident that this is over, that they don't have to worry as much about their jobs, and they reduce these excess savings, there's a lot in a way that could boost demand in 2021.
Christian, where do you see China headed? I mean, could they be the real big winners in 2020 because they got out of the vaccine, they got out of the pandemic quicker and really seem to be on much stronger footing, frankly, than anyone else?
They did. I always call them first in, first out, and first in, best out. They're clearly, relative winners. They're still going to have a lot less growth this year than what they're used to. We think 2 point something rather than, the 6 point something they're used to. They were successful in really containing this COVID. If you look at cases in China, in relation to the population, it's almost non-existent. And then, of course, with the kind of command economy they have, they were able to bring production back. We've seen quite robust export numbers. So to some extent, they're actually benefiting from the situation where they are gaining export share in some of these markets. And consumption, however, and they are trying to boost this now with a lot of credit growth. I don't think people look at this anymore the way they did in 15, 16, but you look at the Chinese credit impulse, it's quite potent and has been increasing over the last few quarters, and that I think will do a lot with a lag. So we're not concerned about China. We think that story will continue to pick up.
Christian Keller, thank you so much. He's, of course, Barclays Head of Economics Research. Now, coming up on Bloomberg Markets, we talk about the emerging markets with Mark Mobius. He's Mobius Capital Partners co-founder. That interview, 10:30 a.m. in New York, 3:30 p.m. in London. We'll also talk about the Great Rotation. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
we explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. Apollo Global Management has agreed to buy Great Canadian Gaming for $2.5 billion. It's the latest shift for the casino industry that's been hit hard by the pandemic. Great Canadian operates 25 gaming and hospitality facilities. Congressional negotiators have agreed to include more sanctions on the gas pipeline between Russia and Germany. The sanctions against the Nord Stream 2 pipeline target insurance and completion companies. They would be included in a must-pass defense bill. And the world's biggest shopping binge is well underway. Alibaba has kicked off its annual Singles Day. It's a frenzy of consumption that will also serve as the best barometer of China's post-pandemic recovery.
Offline sales will recover to a better level in 1 or 2 quarters. But if we only look at online sales, I believe it's already returned to normal.
Chinese retail sales are down 7% for the year, and that's your latest Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, in the last hour and a half, we had that news coming out of Hong Kong that the opposition has quit en masse because of what's been happening with China. Now, what we know is that the bloc actually resigned today after China had moved to disqualify some of the lawmakers that they didn't deem sufficiently loyal. I think they said this morning that they would disqualify 4 lawmakers, and in total, I think 15, all of them resigned. Joining us now is John Liu. He's Bloomberg News' executive editor for Greater China. John, great to have you today. How significant is this? Is it actually a win for Beijing, or is it something that Hong Kong protesters can advance through getting allies to back them up?
I think this is a bad development if I'm looking at it from Beijing. I think the risk here is it's going to escalate the situation with the U.S. and with Europe and the West in general. You have President-elect Biden coming into office. This is going to put more pressure on his administration to act, to take some sort of punitive measures against Beijing for increasing its stranglehold over Hong Kong.
John, Mr. Cheng, Fernando Cheng, I hope I'm pronouncing that correctly, and I apologize if I'm missing the mark, has said that dictatorship has descended onto Hong Kong. Do you feel that on the streets?
I think it's palatable that the level of dissent, the amount of people, how much people are speaking up. Obviously, the number of protesters out in the streets has decreased substantially in the past year, especially after the national security bill has come into effect in Hong Kong. So I think behavior has undoubtedly changed. I think it's sort of this weird dynamic where business, when it comes to IPOs, ants, barring ants, but other IPOs and other sorts of businesses are booming, but sort of dissent is noticeably quiet.
John, do you think the pro-democracy camp is emboldened because of an upcoming Biden administration, or is it timing coincidence?
I think, it's hard to sort of say broadly what the opposition, if they were more pro-Trump or pro-Biden. There was a sizable part of that camp that hoped that President Trump would be reelected. They supported some of the policies that he and his administration undertook, specifically the Hong Kong bill that was passed by Congress and signed into law. I think there's hope that Biden will continue that sort of approach. And by and large, based on the things that have happened today, the resignation of the lawmakers, I have to imagine that the pressure on Biden to be tough on Hong Kong is going to continue.
I look, John, at where we are, and of course, Mr. Biden has options, but we're not going to show the flag in the harbor. How do you perceive the options of America, or for that matter, the United Kingdom, to project outrage, to project protest?
I think the tricky thing is both governments, American and British, are going to want to try to find some sort of response that punishes Beijing but does not punish the people of Hong Kong. And I think that that's tremendously difficult. The other thing is, as your guest was talking about before, there is this divergence in economic performance. China economically is recovering much faster than most parts of the world. And so there is this balance between, Hong Kong and sort of perceived aggression versus what is in the economic interests of each country.
John, we've got to wrap it up there, but thank you again for your reporting from Hong Kong. In charge of all of our Greater China effort and news, John Liu. Please stay with us. Lord Patton in the next hour. This is Bloomberg.
better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
This morning, this November 11th, it is 102 years on, this Remembrance Day in the United Kingdom, there will be a moment of silence, a silence from the cenotaph attending Prince Charles and the Duchess of Cornwall. Let us listen. And as we saw this morning at the Arc de Triomphe, Mr. Macron and the French considering the well over 1 million who died in World War I. The sacrifice of France was extraordinary. John Fenby has written that up. I think this is a profound sacrifice of France in World War I. But Francine Lacroix, as well, London, with just under 1 million dying in that war. An important moment each and every year, Francine.
Yeah, it certainly is, Tom, although, of course, the remembrance is a little bit different this year because of restriction on public gatherings because of COVID-19. Now, homes across the UK moments ago, of course, falling silent in remembrance of the nation's dead because of the World Wars on Armistice Day. People were encouraged, of course, to pause on their doorsteps and by the windows instead of congregating outside together. What was also something that, you know, in London we're very careful to talk about because it's really dominated the news this morning, Tom, is that earlier on, I think about 4 to 5 hours ago, Extinction Rebellion, the climate change group have put a banner and placed a wreath on the cenotaph on Remembrance Day, and this was done with the help of veterans, basically saying, act now, this is our next war. So interesting, Tom, that here in London, Extinction Rebellion hung this climate change banner on Remembrance Day to make sure that we honor the dead of the past, whilst trying to focus also the conversation on climate change for the present.
On World War I, and on this Remembrance Day, and again, Prince Charles scheduled to be here this morning, representing the Queen. 6 million casualties in France, 3.2 million casualties all in from the United Kingdom. And to show the lesser commitment by the United States and sacrifice there, only about 300,000, 1/10 as many as in France, from the United States, of course, entering the war later. We will leave Whitehall and leave this to the silence and the sacrifice of the many wars in the United Kingdom. It has been an eventful week. I had to ask literally Matthew today, is this Tuesday or is this Wednesday? That is the blur that the events have been. And I just really must say, I honestly couldn't remember, folks, starting the broadcast today, what today was. I believe it is Wednesday, and with a Wednesday, First Word News, here's Ritika Gupta.
Morning, Tom, Francine. President-elect Joe Biden calls President Trump's refusal to accept the results of the election an embarrassment. The president won't allow his administration to cooperate in the transition of power, and Biden isn't getting the intelligence briefing that presidents-elect normally would receive. Biden says the president's actions won't help his legacy. And President Trump is quickly remaking the Pentagon leadership in the wake of the election. A day after the president fired Defense Secretary Mark Esper by tweet, 2 senior Pentagon officials stepped down. So did Esper's former chief of staff. Trump allies are poised to take acting roles. Critics say that sends a signal of turmoil in the military leadership. And the coronavirus is roaring back in U.S. cities. That comes after a couple of months of the disease being essentially a rural problem. According to the CDC, metropolitan areas are now averaging a daily record number of cases. That has meant rising cases in and around Denver, Detroit, and Chicago. The virus is also mounting a comeback around Boston and Newark, New Jersey. In Hong Kong, opposition members of the legislature quit after China moved to disqualify unpatriotic lawmakers. It's one of Beijing's strongest moves yet to put down dissent in Hong Kong. The government ousted 4 lawmakers as soon as China passed the law. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Hi, Ritika. Thanks so much. Bond market closed today. Final quote on the 10-year yield, 0.9753. Equities lift up 27 on futures. Francine?
Tom, it's very clear that there's a rotation going on, and that's impacting European markets. But really, the tech sell-off has deepened following Beijing's crackdown on internet and fintech firms. And I think this is longer-term strategy, something that we need to look at. As risk on sentiment is enduring, a gauge of the dollar is pretty much steady and close to a 2.5-year low. So we look at dollar, and of course, U.S. Treasuries closed for Veterans Day.
Right now, Kevin Cirelli, of course, usually getting up the crack at 12 noon, and Washington heating up with news flow yesterday about 3 p.m. Extraordinary comments. Here, the Secretary of State.
Is the State Department currently preparing to engage with the Biden transition team? And if not, at what point does a delay hamper a smooth transition or pose a risk to national security?
There will be a smooth transition to a second Trump administration.
The Secretary of State, and of course the headline there, looking forward to a second Trump term as well. Kevin Cirilli, our chief Washington correspondent this morning. Kevin, I've got to move on from the Secretary of State and his intransigence to the Pentagon in a musical chairs. It gripped Washington last night. Let me ask simply, what do the chairmen of the Joint Chiefs of Staff think?
Well, two things. First and foremost, in terms of the signal, based upon the conversations I've had with members that are close to this world, in terms of the signal that this sends to the international community, it raises questions about whether or not this is chaos or confusion. And really, I think what it points to is continued volatility that the president has deployed as a strategy at some points, both politically and internationally. But the second point that I would make there, in that clip that we just heard from Secretary Pompeo, he went on to say that none of the actions that have been taken at this point have jeopardized Americans' national security. He echoed Senate Majority Leader Mitch McConnell. And again, I think it's very important to note the context of all of this, which is that the Senate score is still not settled. They're headed for a 2-point conversion of sorts, regardless of whether it's Democrats or Republicans in Georgia on January 5th with their special runoff elections.
Well said, but you and I agree that we have to start some form of transition if we're going to have a transition. Kevin, with all your reporting, particularly from Philadelphia to Erie, is there any evidence of the evil things the president's talking about?
None. And in fact, yesterday I spoke with Republican sources, including one very close to the current president's campaign strategy with this legal stuff, and for lack of a better word, because there are no court documents. I mean, there is no affidavit. And so as a result of that, Republicans are deeply concerned and questioning openly, many behind the scenes as well, about what the strategy is here. The second point that I would make here, President-elect Joe Biden continuing on with his transition route. As yesterday he announced the presidential transition teams, landing teams rather. And these are the teams for each of the agencies and departments that are going to be the think tanks, so to speak, in terms of trying to sort through what each strategy will be. I bring that up because it's right in line with how a president-elect typically conducts themselves during this transitional period.
Kevin, good morning. I know this is a difficult, if not impossible, question to know, but is this, 80% political strategizing because of the race in Georgia, because we still don't know the outcome of the Senate, or is this what, we hear underlying certain Republicans not wanting to upset President Trump? And if there's truth in that, why would they not want to upset him if he's on his way out?
They would not want to upset him because of the role that he will play in the future of the Republican Party. And in conversations that I have with Republicans over the last couple of days, whether it's midterm elections or 2024, they view him as a potential ally of sorts, politically speaking. Look no further than Senator Ted Cruz, a Republican of Texas, who really is jockeying to inherit much of the Trump movement and the Trump base for the upcoming midterms as well as 2024. I know that feels like a long way out. I get it. But the other point, to your other point, in terms of the political strategy in Georgia, I talked to a source yesterday who said that they're on the phone with Republican donors because it's all coming down to Georgia. And there seems to be, in the world that I report in, much more of an interest in keeping the Senate and for Senate Majority Leader Mitch McConnell to keep his power than there does to be about overturning or speculating about the legitimacy of our last election.
Kevin, I'd never want to lecture you, or for that matter, anybody inside the Beltway, but I believe the 14-day trend on deaths in America is up 23%. Yeah. Do any of these clowns care about a greater pandemic?
I think based upon, again, when I talk to folks, I think this is the largest unknown variable, Tom, and that's a great point, because when you've got these cases skyrocketing, and as a result of that, states, New Jersey, New York, California, to some extent, even Washington, D.C., here in the nation's capital. I mean, they're having to factor in what is Thanksgiving going to look like? What are the holidays going to look like? What is our New Year's celebrations going to look like? And oh yeah, the inauguration, because Mayor Bowser here in Washington, D.C. giving a press conference yesterday, Tom, about the expected crowds. The hotels are already booked here for inauguration. And so that could inform some of the decision-making on fiscal stimulus. Leader McConnell says the Pfizer news is only evidence that it should be a limited, skinny stimulus.
Kevin, quickly, are we going to hear from Dr. Fauci today?
I'll keep this quick. I'm not sure we are, but if we do, he will likely be in a Biden administration.
Kevin Cirilli, thank you so much, our chief Washington correspondent. They're spirited, and folks, the statistics, for those of you worldwide, the statistic, the FT, the graphics they have, and the statistics Bloomberg has, it is shocking, the expansion of this pandemic. It's 6:30 with the news from Hong Kong. Lord Patton joins us. Futures up 27. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This pandemic, I think we're not just going to snap right back to the previous economy. I think that's unrealistic. There are people, though, that need to be retrained. This has accelerated, for example, trends in retail, right? We've seen that. I don't think retail is going to come back in the same way. So we're going to have to figure out how to retrain that workforce.
The gentleman from Philadelphia speaking much as I heard from the gentleman from Dallas yesterday. The Fed talk here at Bloomberg is just extraordinary, and they're about the longer and broader, bigger picture. Then there's the short term, which is the litmus paper of the bond market, which I believe recently has been yield higher and bond prices down. That means it's a good time to speak to Neuberger Berman's Deputy CIO for Fixed Income. Ashok Bhatia joins us this morning. Ashok, I believe it's yield up, price down. Has price hurt portfolios yet?
Well, it depends a bit on which market you're looking at. If you're looking at government bonds, treasuries, you're exactly right. We're seeing yields moving modestly higher, so prices are going down. So the 10-year treasury, which spent a lot of time around 65 to 75 basis points, is back to 95 basis points or so. So that yields up, prices down. But credit markets, investment grade credit, high yield, emerging markets, those prices are generally all up. those types of more risky bonds have performed extremely well over the past couple of weeks since the election, and modest single-digit returns now year-to-date for a lot of these markets.
I would gauge retail, which is if you see 1 month, 2 months, and 3 months of your statement with price down, you call that a bond bear market. At what point on full faith and credit 10-year yield do you begin to call a bear market in bonds? Is it a 1? Is it a 150? Dare I say if we get back to 2%, is that where the agony clicks in?
Yeah, I think, certainly if you saw us back to 2%, which would be a significant move, that's, over 100 basis points from here, that will definitely qualify. But the other wild card is, the Fed has signaled that if rates start rising too much, and they haven't really defined that, the Fed's indicated they've got some more tools to try and keep interest rates low. So personally, I'd be surprised if we get back up to 2% anytime soon.
Ashok, away from that, are we underestimating some of the disruptions coming from China? This could be monetary policy. We saw it today with, some of their cramping down on technology. How does that impact the Treasury market?
Yeah, China has been reducing its pace of buying of treasuries. So it doesn't appear that they're out there selling treasuries, but certainly, they're accumulating less of them. And I think that's going to be an intermediate term story that's going on. Is China appears to be wanting to diversify their official holdings. So you are having one important buyer of the treasury market taking a bit of a step back. At the other side, though, as we all know, starting last March, again, the Fed stepped in and is buying treasuries. They're buying agency mortgages, have ability to buy corporate bonds. So I think in some ways, what's going on is the Fed is replacing, whatever some of the Asian investors are reducing, and they're doing even more of it. So it's probably not going to be a big market impact for rates in the near term.
Ashok, there's something that really surprised me today. So first of all, if you look at, Spanish bond yields, Italian bond yields, Portuguese bond yields, they're down and they could potentially go negative territory. But then I'm looking at the UK 30-year bond yield, and it breached 1% for the first time. What does that tell you about the state of Europe?
Yeah, this is a really important dynamic, is that what we are seeing is a lot of these, I think there's two things. There's a lot of these riskier, quote unquote, riskier bond markets. So, like you mentioned, the periphery bond markets, which continue like, a lot of the credit markets to do extremely well as investors are looking for any source of income. But the second element is, as you mentioned, this rise in 30-year bond yields. This is a global phenomenon. We've seen yield curves, what we call steepening. So front-end interest rates really not going anywhere, but these 30-year rates rising. It's happening in the U.S., UK, Europe, Germany in general, too. And I think what that's reflecting is just longer-term risk premiums entering government bonds as fiscal stimulus remains relatively high. And importantly, some expectation that we'll see a bit of a pickup in inflation rates into the next year or two. So would look for, a bit more pressure in some of these longer ends of the market.
Ashok, thank you so much. Way too short of a visit. We'll do this longer next time on a busy Remembrance Day. Ashok Bhatia with us with Neuberger Berman on a little bit of a yield lift. We see bond market closed in the United States, 0.9753. That final quote in the 10-year yield distant from 0.70. On EM, after we speak with Lord Patton, we will speak with Mark Mobius in the 10 o'clock hour on Bloomberg. We do economics, finance, investment. We do politics. And for Mark Mobius, we do the world economy. This is Bloomberg. Good morning.
So do you get tired of people calling you a jazz legend? Do you feel older when they say that to you?
Yeah, I like the word jazz. I don't like the legend.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Surveillance, I'm Rishka Gupta with your Bloomberg Business Flash. Bloomberg's learned that Italian payments processor Nexi is close to a $9 billion all-stock deal to buy Danish-based rival Nets. It would be the latest acquisition in a rapidly consolidating industry. Nets is backed by private equity firm Hellman and Friedman. Bloomberg's learned that Airbnb's long-awaited filing for an IPO has slipped to next week. The home-sharing giant had planned to file on Thursday, but it decided on a delay to keep from being overshadowed by the U.S. election. Airbnb is planning to raise as much as $3 billion on its debut on the NASDAQ. And London's Heathrow Airport keeps getting crushed by the pandemic. Passenger numbers there fell 82% last month from a year ago. And Heathrow warns that this month's numbers are likely to be worse because of a travel ban. Officials say that the lack of a testing program has left British airports unable to compete with European rivals. And that's your latest Bloomberg Business Flash. Tom?
Ritika, thanks so much. Bond market closed, equity market open. Not say I agree with that in honor of those that have served the many, many conflicts and wars in America. Futures up 31. I do want to note Turkish lira on a tear, stronger lira, and we had a print of a 7.99 handle moments ago, about 18 minutes ago. That's a moment. 8.01 in from 8.50-ish. Strong Turkish lira over the last number of days. Francine?
Yeah, Tom, I also wanted to show you actually the yield on long-dated UK debt climbing above 2% for the first time since March. So we'll have plenty, of course, on bond yields. But coming up next, we'll talk Hong Kong with Christopher Patten, the former Hong Kong governor. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, I know you've been way out front on Turkish lira. We have, of course, a great chart that we almost look at hourly to look at what Turkish lira has done. In the last moments, the Turkish president, Mr. Recep Erdogan, saying that he fully supports the central bank policies. Now, in a speech that I believe he was giving to Parliament over in Ankara, Tom, the President Erdogan was urging citizens to trust the Turkish lira. He also said that he will hold a series of meetings with investors. On the back of that, the lira is extending gains to below 8 mark versus the US dollar after the statement. Tom, what's very significant is that for the last 2 to 3 years, investors had criticized, of course, Turkey and the central bank because of its unconventional economics, and the government has now started taking steps towards a more rational approach. I don't know whether investors will buy into it or not, but certainly there's a dramatic shift from where we were 2 months ago.
This is dramatic shift. That's absolutely right, Francine. Let's stay on this for a moment, folks. He fully supports central bank policies. This is Mr. Erdogan. And Francine, this is a sharp, sharp change for Mr. Erdogan if it sustains.
Yeah, one thing, Tom, that I keep on hearing about, of course, you and I call a lot of investors and we speak to market participants, is that actually having such a seasoned economic management team is actually a welcome change. This would be economic advisors to Erdogan. It's the head of the central bank. But of course, its task is still complicated by the extreme centralization of power in Turkey. And of course, then there's a political ramification, like geopolitical risk as a backdrop.
Well, it will be interesting to see. Again, futures up 31 on this Remembrance Day, this Veterans Day in America. There is news flow of any number of ways out of China, some on capitalism, some on technology. And then there is the political economy and the changes of Hong Kong. Here is their chief executive, Carrie Lam.
I wouldn't say that for members remaining in the Legislative Council, we will have a rubber stamp legislation. I welcome diverse opinion in the Legislative Council. I respect the check and balance responsibility of the Legislative Council. That is clearly written in the basic law as the constitutional duties of a Legislative Council. But all these responsibilities have to be exercised in a responsible manner.
Carrie Lam on the latest events in Hong Kong. Prince Charles today scheduled to be at the cenotaph at Whitehall on this Remembrance Day. 23 years ago, he was scheduled to hand over Hong Kong on Britannia with Christopher Patten, who was a former Hong Kong governor at the moment. It was a seismic and visible change at the end of the 20th century. Lord Patten joins us this morning. Lord Patten, I think of the sacrifice of the British up and down the Pacific Rim, including aiding China in World War II, and the reach has changed. What can Britain do about a Hong Kong where one of the dissidents today framed it as a dictatorship?
Yeah, it's turning into just a replica of the police state, the surveillance state in mainland China, and I'm afraid it's a reminder of the fact that you can't trust anything China promises to do. We've seen today the snuffing out of the last remnants of democracy in Hong Kong. Carrie Lam says she's very much in favor of diverse opinions in the Legislative Council. Don't believe it for a moment. Anyway, she doesn't really run Hong Kong anymore. Hong Kong is run by the Chinese Communist Party and its local boss in Hong Kong. But what you've seen, I'm afraid, is of the extent to which China is involved in a war of values against liberal democracies in Europe, in the Americas, in Britain. And what we have to do is to work together, but not establishing a Cold War, but actually stopping China undermining the values which we hold as so important and which have determined Hong Kong's success for the last years.
Lord Patton, I learned about sanctions 34 years ago, and I would suggest that Senator Biden was involved with this, with the sanctions of Washington against South Africa, and the stunning idea that possibly they worked. If Hong Kong is a center of capitalism, a center of international finance, will sanctions work against the territory or against Beijing?
Well, that's a very good question, and it's why I've always been rather doubtful about sanctions as a policy. And I think we've very often thrown them around as an alternative to doing other things. When I was governor of Hong Kong, I used to lobby very enthusiastically against imposing sanctions on China or Hong Kong. But you've got to avoid anything you do to support Hong Kong at the UN, in human rights organizations and so on. You've got to try to make sure that it doesn't hurt Hong Kongers. If you want to do things, they should be aimed at China and Chinese officials. And I certainly think that things like Magnitsky legislation are very valuable in dealing with the thugs who run police states. I think they've been helpful in relation to Russia, in that they'll be helpful insofar as it matters to them in Belarus. And I think they're quite helpful in China and Hong Kong. But I certainly want to avoid anything which hurts people in Hong Kong. That's not what we want to do. China is hurting people in Hong Kong. Look, for years, Hong Kong's great success as a spectacular market economy has been based on free capital, on free information, and the rule of law. And you take two of those things away, and the third starts to weaken.
But Christopher Patton, how will a Biden administration navigate this?
Well, to be fair to President Trump, who's departing office, I imagine, even as we speak, to be fair to President Trump, he did actually focus on the menace represented by China to the international community and to liberal democracies. I'm not sure what he's doing at the moment actually helps the case for liberal democracy, but that's by the by. What I think Mr. Biden will do as president is something which wasn't President Trump's strong point, and that is to build alliances, to work together with others, with Australia, with Europe, with New Zealand, with Canada, with India and others, with South Korea, with Japan, because all of us have the same interest in stopping China, destroying the sort of world we want and destroying the sort of values that we hold to be so important. I'm not in favor of containing China. I am in favor of constraining China and stop it ravaging the rest of the world. We know of the responsibility Chinese secrecy has had in allowing the pandemic of coronavirus to be such a force, a terrible force in the world. We mustn't allow China to destroy parts of the international community and international life.
But Lord Patton, given the West and NATO allies actually, some would argue, didn't handle Russia as it should have 4 or 5 years ago, what makes you confident that they can now handle an even more important force like China?
I think that's a very good question. I think what we've got to recognize is the best thing we can do for Hong Kong is by making sure that we hold on to our values, democracy, rule of law, freedom of speech and freedom of the press and so on, that we hold on to those things. And I hope that in due course, Hong Kong will have those qualities back again. But we're certainly not going to immediately be able to change China, but we must be able to stop China changing us. That's the threat, and we can only deal with it if we work together in a partnership. I'm very much in favor of the Trans-Pacific Partnership, and I hope that President Biden will return to that proposition.
Lord Patton, because of the tenure and the overlap, I must ask you about the former Prime Minister John Major's comments in recent days about the placement of the United Kingdom in world international relations. Has Britain become a second-rate power?
Well, we're not a great power anymore. I think we matter. I think we're, in terms of our economic strength, we're 5th or 6th in the world, depending on how you make the calculation. We've got a stronger military than all other European countries, I think. We've got a very good diplomatic service. We've got the biggest aid program in in Europe and one of the biggest in the world. So we do count. We count rather less if people think we break our international agreements. And there's some problems about whether we'll do that in leaving the European Union, because we're trying to legislate at the moment, or rather the government is, to escape some of the obligations which we've already agreed with Europe in order to try to safeguard the Good Friday Agreement. That would be very bad for our international reputation. But John Major was entirely right. We're not a great power. I think we're a great country still, and I hope that we won't undermine that by the way we behave. And I hope that we'll still be able to strike a deal with Europe, because leaving the European Union with no deal would probably be the greatest act of self-harm, not least to our economy, that we've performed since the Second World War.
Thank you so much, Christopher Patten there, the former Hong Kong governor, joining us this morning. Now, up next, we, of course, track COVID-19 with Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. We'll have a full roundup of the pandemic. This is Bloomberg. From London and New York. Tom, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Lauren Sauer, Johns Hopkins Assistant Professor of Emergency Medicine. Lauren Sauer, thank you for joining us. When you look at the number of infected in the U.S. and the number of hospitalizations, can you juxtapose that compared to the encouraging news that we had about a vaccine today? What happened this week? What happens in the next couple of months?
Yeah, well, the cases are not looking great. And so it is, I think, very, very optimistic to see this vaccine. And I think everyone's very hopeful. That being said, the vaccine is not going to be a silver bullet for the pandemic. We need not just production, but also uptake. And so as we're watching these cases tick up and tick up and tick up across the country, I think everyone is hoping that people move into the holidays and move into winter very cautiously. Even I saw yesterday that the stocks, the air industry stocks went up on the news of the vaccine, which means I think everyone's very hopeful and excited that things are going to get back to normal. But it's definitely going to take a while to get there, even with 1 or 2 vaccines coming online.
Lauren, the numbers are absolutely extraordinary. Mayor de Blasio in New York talking about a cusp of a resurgence in New York, which seems to be way behind some of these most challenged states. And yet in Washington, as I mentioned to Kevin Cirilli in a half hour ago, it just seems to be completely off the radar. What does someone like you in the trenches want to see out of Washington right now?
I think one of the things we'd really like to see is a joint task force working on this. We've seen that in former administrations during a handover when there's a crisis. I'd like to see activities moving towards ramping up the Defense Production Act, building national strategies for testing, which we still don't have in any systematic way. All of these things can be happening even as the transition to the new administration happens. I'm hopeful seeing some of the names on President-elect Biden's new task force, but I would like to see that task force working with the current administration to really move some of these activities forward, to really make sure that we don't have to wait until January to see a scale up in the response.
Now, Lauren, is the vaccine really the only way to control this virus? And how hopeful are you that we'll get something in the next 6 months that we'll be able to distribute correctly?
I would say the vaccine, or a vaccine, is the most important tool in our toolkit. And I think we're moving really closer to having that readily available, not just with this vaccine, but with several of the other ones that are in phase 3. So the promising data is really exciting. That being said, we saw a press release. We don't know if this vaccine prevents infection or prevents severe disease. We have to wait to see what the data looks like to see how strong this vaccine is going to have, how strong the impact is going to be. Things like masking, things like social distancing, contact tracing, all of these public health tools that we have had and have applied in very disparate measures remain incredibly important, and probably more important until that vaccine is widely available. The other challenge with this vaccine is that the cold chain storage, so how you move it around, it has to be kept at -70 Celsius, and that is a real challenge globally for how you distribute a vaccine like this. I think the activities around making sure that we can do that effectively are ramping up, but the logistics on that side of vaccine distribution are going to be incredible.
Lauren, thank you so much. Lauren Sauer there of Johns Hopkins. And be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up on Balance of Power, Michael Osterholm, the University of Minnesota Infectious Disease Research Center Director and Biden COVID Task Force member, will talk about the number of infected and the number of people in hospitals in the U.S. That's at 12:30 p.m. in New York, 5:30 p.m. in London, and this is Bloomberg.
Better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, the COVID-19 pandemic has exacerbated a crisis of inequality in the U.S. economy. TIAA President and Chief Executive Roger Ferguson told Bloomberg's Jason Kelly how the group has taken steps to meet this critical challenge.
The first part of tackling one of these challenges is to be honest and say, yes, it does exist. And yes, it is shown in financial metrics as well as other metrics. The second approach that we took was to say we have to double down on our own values. We have a long history here at TIAA around diversity and inclusion. And so let's remind ourselves of the value that we place on diversity and inclusion. And we did ask ourselves, well, gee, are there things that we can do a little better? So one of the things that we've done is we've recognized that we should always have a diverse slate of candidates applying for our jobs. We've now also said we should have a diverse slate of interviewers talking to those candidates so that we have a diverse point of view on both sides. So we've observed some things that we could change in our own organization. The third thing that we've done is we've tried to figure out how to reach out to our various communities to be responsive to these challenges. As you know, TIAA serves a higher ed sector. So we've had outreaches to our HBCU colleagues to talk about recruiting, training, et cetera, job preparedness. We've also had outreach in our communities where we have a large number of our employees to provide social service activities over the summer. We hosted a symposium of business leaders in Charlotte, which is our largest single location. And the final thing we've done is we've made sure that we understand other ways we can contribute by focusing in on financial literacy. We are, after all, a financial services company, so we've studied differences in financial literacy. Indeed, last year when we did a survey, we over-sampled African Americans to make sure we understood their challenges around financial literacy. So we're bringing our brain power, our analytical skills to bear here. All this has been wrapped up in a program that we call Be the Change. So it's change through dialogue, change through understanding, change through leadership, and change through action. And so we've given this a brand name, and it will be with us for a long period of time as we and society work through these deep-seated problems that go back hundreds of years in American history.
How do you think you've changed throughout this very turbulent year?
Well, that's a very good question. This year has forced me to reflect on my own, personal journey and origin story, and to help other people understand, how my experience might be different, but it's certainly an experience. So this year I've been forced to reflect on the fact that I really did grow up in a financially constrained environment. We'll put it that way. There were 5 of us living in a 2-bedroom house that was less than 1,000 square feet. Yet, I also had the benefit of parents who put a great deal of weight on education. My mother in particular always thought of education as this phenomenal, gift that no one could take away from you. And my father put a great deal of weight on financial literacy. We didn't know the phrase at that time, but nevertheless, I'm the beneficiary of that. So this period has allowed me to reflect on how, my origin and origin story, if you will, has been an important part of my journey through life. It's also allowed me to reflect